All right, give me 1 second here, guys. We're getting this live stream recording. Welcome, everybody. Lots going on today. We got a Fed rate cut announcement starting like right now. All right, guys, if you ever post a link in the Discord main chat and you see that it was deleted, it's not, no one's mad at you. It's not because you did something wrong. It's that if it's an outside channel, if it takes someone out of the Discord, sometimes, especially new people, have a hard time getting back in. They don't know what happened once they click on it. So please don't post outside links, especially we don't promote other people's YouTube channels. And the reason why is because I haven't vetted them. I have no idea what they're talking about. I don't know if it's information that's valid. I don't know if it's good. If you want to post something, it's not disallowed, but send it to me and say, hey, I was thinking about posting this in the chat. Is it okay? That way I can look at it and vet it first, because the reason why, guys, it's not because you don't have good judgment. It's not because you're not posting good stuff. It's because brand new people click on it and they think it was that they learned it in the Crypto Renegades Mastermind, which puts the liability on me. If they click that link, go to somebody's page, see something they're offering, buy into it, get scammed, or for whatever reason, they come back and say, well, I learned that in your group. I saw that in your group. So I don't need that. I don't want that. So please do us a favor and just be careful what you share. If you're sharing memes and things like that, as long as it's not a clickable link that takes someone away from the mastermind chat. If it's a video and it's uploaded right to the chat where you just click it and it plays right in the chat, that's a different story. But if it takes you to somewhere else, then I'm probably going to delete it without even looking at it. So just send it to me in DM first. And it's not because it's not good information. It's just because they send new people on a rabbit hole where they can't get back in for whatever reason. We've had that happen many times. That's why I do that. All right.
This looks like junk food. And then it goes on.
George, mute yourself, bud. Never mind. I muted you. We appreciate your dancing and your singing, but not right now. All right. Everybody ready? Just go to the trading screen here. Let's move this over here. Because I am still having issues with good old Phemex charting. Alex Lord, welcome, welcome. Haven't seen you in a while. Maybe you've been here. I just didn't see you.
A little bit of both.
Welcome, welcome. All right, let me just what's going on here?
You having issues on Phemex?
Just loading, just certain charts.
Okay.
But only on like USDT. I don't have the problem. I know it's probably on my end because I have a million open tabs, but everything else seems to be working at lightning speed except for Phemex.
Got you.
And it's probably just say again.
Okay. No, I was saying you primarily focus on BTC USD tether with a tether on trading with your trades.
No,
in terms of
I usually focus on a coin margin, Bitcoin and XRP and Ethereum margin. So it's instead of USDT, it's the other option. I'll show you.
Okay, the coin margin in which you're betting BTC against BTC for more BTC or XRP.
I'm betting BTC against no. It's when you're on a coin margin, you're betting the coin against the US dollar, not USDT against the coin. So if I make a profit on coin margin, I'm making that coin. I'm not making US dollar. I'm accumulating more crypto. If on USDT you make a profit, you're accumulating more USDT.
Okay, that's what I meant. I said it wrong. That's why I said BTC against BTC for more. I get you. Yeah, okay.
Yeah.
Gotcha. I'm following. Yes,
yeah,
sir.
no problem. By the way, guys, if you're relatively new, a week, 2 weeks, a month, and you've never asked a question or introduced yourself, please come off mute, say hi, don't be scared. It's better to get in, to make an announcement and get the habit of coming off mute and asking questions, because what I see a lot of times happening is people, they're on this call for 2 hours. They have a question, but they don't want to ask it because they feel like it's a dumb question or they're too new and all that kind of stuff. And then they send me a DM with the question and I don't get to it for 3 days and they needed to know it right now. So it's not because I am lazy. It's because the DMs are, guys, I'm telling, that's why we're here for that's why I'm on this call for 2 hours to answer your questions. So don't DM me right after the call asking questions. Do it right here on this call. That would be much appreciated on my part, and it will help you faster. And there is no such thing as a dumb question. And if anybody in this group ever says that's a dumb question when you're asking a question, I will kick them out of the group. Because everybody should know better than to do that, because we've all been new at one point. You're welcome. I'm not sharing my screen. I'm going to share my screen right now. Go ahead. You have a question?
There is one dumb question. If government is the answer, that was the dumb question.
Is government the question answer, or if?
No, if government is the answer.
Yeah.
That was a dumb question.
Yeah. Yeah.
Bad joke.
No, it's true, but we still don't want to tell anybody that's dumb. Some people are still unsure of whether that's true or not. But I think for the most part, the people that we attract into the Crypto Renegades are already entrepreneur-minded, like-minded individuals that already kind of know what the problem is, and that's why they're here. But at the same time, just a little housekeeping. Just a little housekeeping. All right, so here's this is BTC on a Bitcoin margin, still in a downward trending channel, but it did break out as far as I'm concerned. Now, if I move this top line, this top resistance line to the very tip top of all of the wicks, right about there, hitting that one. Let me just zoom in so you can see it. That one. And then even these went up a little higher, but there was resistance there before it popped up, a little bit of support before it broke down, a little bit of resistance before it popped up, and then it fell through, and then resistance again. So that's the line. And then up here, it's just right at the top. If I do that, then we still broke out, guys. We broke out and we're retesting. So it's just moving slowly. Now with this rate announcement here, we could see some whipsaw action up or down, but I'm going to continue this upward trending support line, even though it broke through. I'm going to continue this resistance level, which is a horizontal resistance line. It was support here, resistance, 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 and resistance. We broke through the downward trending resistance. We're now in the apex of this wedge. And so the breakout was imminent to this, and it did, but it hit resistance here. But now it's still above this. Is it going to come back below? That's the question. And what we could see when the announcement happens, I believe it's going to be a reduction. I think it's going to be a lowering of interest rates, possibly in the 0.25 range. We might see a little whipsaw like that where it comes down and bounces back up when people, the movement is usually fear-based and it's usually knee-jerk reaction. And but generally speaking, whenever we have whipsaw action up and down below the support and above the resistance, it usually comes right back into the same pattern it was in already afterwards. So don't worry about it. I'm not closing my trades out at the moment. I'm not worried about it right now. But if it's bad news for crypto, then yeah, we could see a dump below this upward trending support back into the downward trending channel, and then I will have no choice but to reverse those longs. That's the risk I'm willing to take. Not a big deal, but I don't think it's going to be drastic today. I think people are already anticipating what's going to happen. I believe that there will be a slight lowering. It's not going to be 50 basis points. It might be 25, but we'll see. It should have already started. Oh, wait, no, it's at 2 p.m. I'm sorry. It's at 2 p.m. Eastern. Until then, people anticipate. So I am up on, from my last share of my open positions, I am long on XRP, USDT, Ethereum, USDT, XRP, coin margin, BTC, coin margin. And on my ETH, let's go look at ETH because my entry was down here. It was a good entry. It was right before the big pop up. It was a nice little bullish flag forming. And I would say that we were in downward lower high mode here, but we were also in an apex from the low here. Oops, I'm just going to take this line right here and move that to here. We're in this kind of wedge or apex. Jeez. See how things are moving slower on the USDT. I still haven't fixed that yet. Let me get rid of this. And we have a nice bull flag forming right now on Ethereum. So we have this big pump because it broke out of that apex. That's what I was anticipating. I did prematurely go long right when it was touching it, and then it popped right through. I had a very tight stop loss on this because I was, if it were to break down, because we did have lower highs, but we also have higher lows, and it's coming into an apex. And I believe that we were going to experience something bullish. That was just my feeling at the time. It was a good call. I think a lot of people in the group made money on it because I saw a lot of people posting, but let's just look at the current formation. We have a high, a lower high, and a lower high. We have a nice little tiny flag forming. I am on the 1 hour time frame. It's coming into another little wedge in apex. That's the current situation on Ethereum. I'm going to put a stop loss at 3,200 just to get it on the board. What is the current price? Oops. That's locking in an 18% gain.
Are you setting up a limit order?
Nope.
What?
I'm already in a market order. I'm already in the trade long. A limit conditional or a stop loss is a conditional order, a limit order. A take profit target is a limit order. But for some reason, this is another problem I'm having with the USDT. I'm going to do it on my phone. For some reason, on my PC, I have a problem with USDT. And it's not that it can't be fixed. It's that when I get off these calls, I get sidetracked on other things and I forget to go and fix it or have it fixed. But Bill, if you're on, maybe later you can walk me through your strategy, your solution.
Okay.
Okay, so I would put a stop loss right here at 3,200. I should just move it right up to here, but for now I'm just going to put it above my entry into profit. Here's my entry. Here's my liquidation down here. I'll put the stop loss right here at about 3,200. And that will, at least if I'm not paying attention and we have a big fast move down for whatever reason, I won't lose any money on this trade. I'll just take it out. I'm up $395 on this trade at the moment. Not huge, 66%, 375 USDT. Not a big trade at all. I was at a 6,000 contracts at 10x leverage. Not really trading a lot of money here. Just whenever we're in these tight little unknown areas of trying to break to the upside of a long downward trending channel, and we're possibly in bear market mode, possibly if we just keep continuing downward, then I don't want to be in these longs for long. I want to only be in them, while they're having these upswings, because we can have upswings. Like, look at this upswing. But if I go to like the daily, the overall market is still down from Ethereum's top.
Nico, I have a quick question.
Yes.
So like on all the different rate cuts that we've had this year, it's always gone opposite of what we were doing or what you would think it should do, Do you think because it's December that this rate cut actually might go up?
The rate cut will go down, I think. But you're talking about crypto will go up because of the rate cut?
Correct. So like every day there's a rate cut, it just dumps like crazy when you think it should pump. But because it's December, do you think this time might be different?
Well, it doesn't dump because the rate cut. I don't think it's dumping because of the anticipation of the decision that's going to be made. Once the actual cut happens, I think it kind of resumes back where it was. In my opinion, I don't think it's the actual rate cut, because if interest rates are lower, I would think that would bring confidence in the market, more liquidity, right? And I mean, that's what should happen.
I mean,
But-
it shouldn't do because everyone thinks that it's going to be cut, right?
Correct. I think it's already kind of a foregone conclusion that there will be a rate cut, not a rate hike. And so therefore, what we usually see happen is a whipsaw action right around the time of announcement. That's when people are anticipating or taking trades or closing positions or selling into profit or whatever they're doing right before it happens. And that causes a lot of turmoil in the market, a lot of volatility. People freak out, people get scared. But usually what happens is if it does dump down, from the current price, let's just say 3,356, it dumps down to 3,000 really quick. Boom, it usually comes right back up right after the announcement when people realize the coast is clear. It's kind of like you ever see those little meerkats? They come out of their little holes, they stand up and look around, and they hear a noise and they all just scramble, and then all of a sudden when they realize it's no big deal, they all come back out. That's kind of what's happening here. It's like you got a lot of uncertainty in the market. I think people are more fear-based, knee-jerk reaction. And generally speaking, if you're not in any trade right now, I would say don't be in one. That's great. Wait for after the announcement. Yes, because you could enter long right now in anticipation of a pump and be taken out on your liquidation or stop loss if it's too close. So, but if you're already in a position and a good one where you're way into profit, like I'm up 62%, you think it's going to drop 60% or 6% on this amount? Because I'm at 10x leverage, so that's why I'm at 62% gain. But if you divide that by 10x, that's a 6% move to the upside. Do you think it's going to drop that much on a rate cut announcement? Maybe. But let's just look. Let's just take this upward trending support line right here and bring this up. Let's go to, I mean, here's kind of the wedge we're in right now. On Ethereum, it did break out. It's very clear. It broke out of the downward trending channel and retested, right? Clearly retested. And then this is a nice bullish candle. It pumped to the upside. And here's the next resistance up here. But here is still the support. It's upward trending. In fact, it might even be a little tighter, like right up to there, depending on where you want to. So let me just bring that all the way up to that line. This is just my elementary way of creating these wedges here. So we had a nice week down there. We're holding support on this line. So what could happen is we pump to the upside. Maybe it hits resistance. Maybe it comes back down, hits support. But we want it to stay in an upward trending, meaning higher highs and higher lows. And if that happens, we can get a higher high here, hold a support on previous resistance here, hold a support on this upward trending support, and break out of this wedge right here, because this is a trend reversal. And so this is basically it right there. It came to the top. Here's the top. Here's the bottom. Here's the top. There's the bottom. Here's the top. Could it come back down to the bottom? Yes. In fact, if it did, it might be somewhere in this range if it was during the next couple hours. I mean, I am on the daily, so this is a, if I go down to lower time frame, you'll see something different here. But this could be just like this, where we stay in this channel now for all the way up to this resistance. That is the next resistance. You can see it here. And if I take this over, it's here. We had support, 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 resistance. Resistance, support, support, resistance, breakthrough. Support, 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 resistance. That's the next one up. And we already broke the downward trending after coming all the way down here and retesting the 2612, which was also previous major resistance. And support, if you just keep going back further. So we already hit that. We came all the way down to that, pumped all the way back up. Remember, look, that's where it broke out in order to get to the new all-time high. So that's just a retest from the breakout. And so I think Ethereum is looking strong, possibly, especially going into the end of the year as the altcoin, if Bitcoin loses dominance a little bit, you got Ethereum always tends to break out, goes up, and then a lot of other tokens on the Ethereum mainnet will go up. Solana, XRP, all these other ones should decouple. And that doesn't mean Bitcoin will go down while they're going up. Bitcoin could still go up, but they will go up at a higher percentage rate faster than Bitcoin.
Nico, I'll just say,
Nico, sorry, go ahead, yes, sir.
I was just going to say, Nico, next week is the Japanese market decision. I think is more important and more of a factor than this quarter point interest rate turn. But also Fusaka is coming online for ETH, so it's got to drop the gas fees not only on ETH but across the board on all the other platforms. And it's also, you would think, okay, they're going to lose money, but they've also built in some things that keeps the valuation. So that all is a plus for ETH, where it's been in the doldrums for a while. But I think the Japanese bond market decision next week has got a probably more impact than
For
this.
sure.
And
Most people don't even realize it, but we have what's called a reverse carry trade that's happening with Japan, and it's unraveled. It's unraveling right now. And that is going to cause havoc, huge economic impact around the world. And, Trump is trying to put all these things into place to probably save. He never talks about it, but really the reality is that it's a real thing. And
Possibly good for XRP though.
very good for XRP.
Nobody's supposed to be talking about it. That's why.
That's right. And
Nico, regarding XRP, can I ask a quick question?
yes.
I have a weird thing happening where I had a long on XRP on my Phemex account, and I just got tapped out of it. My stop loss was pretty tight. It was at 2.04, and I got popped out this morning. But I have a bunch of charts on TradingView for XRP from a bunch of different exchanges, because I just look at all the exchanges. I'm like heavily watching XRP, and none of them went down that low. And the Phemex one had one large wick all the way down, and it stopped me out. Yet none of the other charts showed that it went that low this morning. So I'm like, this is the first time I've experienced this, and I'm wondering if you know what's going on with that.
Did you see that on your mobile or on the actual platform website?
Mobile.
Let me look, because mobile, sometimes I see these crazy wicks, but I don't see them on the actual chart.
But the crazy wick happened, and it stopped me out.
Where was the wick? I mean, what time frame? What time frame are you on?
I'm on the 15-minute right now, and it wicked me out at 2.04. Hold on a second. Let me take a look again.
Coin M or US dollar tether?
Coin M.
That's why. There's lower volume, so the whales have more push. Whales tend to fill the inefficiencies on the VWAP close. You'll notice that. They'll just slam the price down, and it leaves wicks. So you can take advantage of that now that you know it.
This is the wick you're talking about right here.
Well, it was on Coin M. I'm trying to accumulate more XRP, and I got stopped out.
Well, you're right, because right here, this is the wick you're talking about, because it's $1.82 is when we hit this. This was wait, are you talking about recent?
No, it was recent. It was I woke up and I got stopped out. Yeah.
Yeah, it's over here. Hold on one second. On my
Hold
phone.
on,
on my phone.
I think I know what. Sorry, I think I know what he's talking about, because on your phone, the chart defaults to last price, which will show those wicks, whereas most of us on the computer have it on mark price, which won't show that price unless you switch it over.
Right. So here's what you got to do. I was just noticing that. Thank you for bringing that up. On my phone, the price dropped down to 204 and bounced right back up on the 15-minute chart, and that was just yesterday or today, basically. Earlier, or not today. Hold on. It was sometime overnight, right? You're talking about recently, within the last 24 hours. So here's what you got to do. You got to come up here.
It was at 7:45 this morning.
Yeah. Okay.
Pacific, and it just popped down, and it stopped me out. And I'm looking at every single other chart, and my stop loss was like a little bit above that, but every other chart didn't go that low down. So I'm like, oh my gosh, how come the only chart that stopped me out was my Phemex account, and all the other charts showed that it didn't go that low?
Yeah.
You probably
So
also
are
had your
you-
stop. You probably also had your stop loss on last price as opposed to mark price.
Yeah, you got to
If it
be
would
on
have been on
mark
mark price, if it would have been on mark price, you would have been protected because it wouldn't have triggered.
So
More
you
likely.
just look up here. Who was saying that anyway? Who was having the problem?
Sim.
It is Sim.
Oh, Sim. See up here on the upper right corner of your chart, it says mark price, last price, index price, mark price. I keep mine on mark price. You might need to do that on your cell phone too, on your cell phone app.
Show me one more time. Where is it?
Up here in the top corner of your chart, next to the camera, next to the screenshot, right
Uh-huh.
there. There's a little drop down menu. Might say last price.
Yeah.
Change it to mark price.
Mark price. Okay. What about on the phone? Because
So you got to
when
do
I
it on the
wake when I
phone.
wake up in the morning, or sometimes when I just do trades, I do it on my phone when I see when I want to do
Yeah,
it.
that's okay. You got to switch it there too.
So
I
you say
think correct me if I'm wrong, everybody. If you change it on your in your account, does it change it automatically on your mobile?
it's so funny because this is the first time this has ever happened to me, and I've been doing this for all year, and this is the first time I've seen this big of a difference between the price on Phemex and all the other exchanges, including I think I even have the Phemex XRP on my on my other charts on trade whatever it's
Yeah.
called.
Well,
Yeah,
we've talked about it many times here to be on mark price, but
mark price. I've never heard that. Okay, so hold on.
I'm trying to find it on my phone now because I don't even know where to see it on there. But I just assumed that it was already set in my account.
When you create a stop loss, it's defaulting now to mark price, as far as I know, unless you go in and change it. I believe it defaults. I'm going to take a look.
Yeah, I'm looking right now too.
You do have to do it separately on your phone.
Okay, thanks for that.
For each trade, or I can just set it as a.
Look at your open positions on your phone and see where it says right
I have
next
no
to
open, I have
entry.
no open. XRP was my only open position, so.
Oh, okay. When you next time you open up a position, look on your phone where it shows your open position, it shows your unrealized gains. Underneath that says realized P&L, underneath that says entry price. To the right of that, it says whether it's mark price or limit or not limit, but last or index.
Is there a way to set it now before I put a trade in? Like how do I do that?
Yeah, there should be.
If
It's
you're
right there.
if you're setting up a trade, before you set it up and you set up a stop loss, it'll automatically put your stop loss at mark price. But if you add it in later, it's going to default to last price.
That's right.
It's an idiosyncrasy that you have to remember to always check and make sure it's on mark price. Because that last price, you get that one little spike. The other five markets didn't move. It was just in your market, and it took you out, but it didn't change the mark price. So you have to. That's one big point you have to remember.
Okay, this is going beyond my my ability right now. Dumb question alert.
No, that's not dumb at all. That's a very important one.
That's an important question.
So when I
question.
when
Thank
I-
you. for asking.
Hold on, guys. Hold on. Go ahead, Sim.
Okay, so I'm in Phemex right now.
Right.
I'm on my phone. I'm sorry, I'm like watching my son right now, so I'm not by the computer. And I'm looking everywhere. I don't see anything that says mark price or.
Because you're not in an open position at the moment, but if you go to place a trade on your phone, so let's just say you want to go long right now.
Right.
You're going to click. You're going to put isolated market. You're on market.
I'm on XRP as CoinM.
Okay. What underneath that though says isolated leverage.
Isolated.
Underneath
Right.
that available. There's a what does it say? Market or limit conditional or
Market. Yes.
Okay.
I always do market. Yeah.
Okay. And then when you click, if you're going to enter the position right underneath, after you change the percentage that you're going to risk, right underneath market, right underneath that little box that says TPSL.
Right.
You click on that, and what they're saying is you put that in first.
So I always do the number of contracts, And then I go to TPSL, and then I go to advanced because I want to see. Well, first I put the number of contract. Hold on, I'm doing this right now as we speak. I go to advanced, and then I'll put my stop loss in, and then I'll look at how much it's going to cost me, and then I adjust my contract number so it fits how much I want to lose if it goes the wrong way.
Yeah. To be honest with you, I never have changed this. Mine's always mark price. So I don't know. Even when I do it on my phone, it's mark price. So I'm not. I'm looking at all my open orders. Even on my phone, it says mark price on my open positions.
But where does it say mark? Where is the
You have to
option?
be. It only says that in an open position. That's what I'm saying. You have to be. You're not in an open position. So
okay, I'm gonna put in a little open position just to
okay.
Just to test this out. Stop
So it
loss.
might. What I'm saying is it might have to be changed on in your account, because maybe mine shows up on my phone as mark price because I already have it on mark price here on my account. I don't know. I don't know if that's the case or not. Someone says you have to do it separately on the phone.
I see it on general settings.
On your phone?
Yes, at the top, the three dots.
Go ahead, Moni. You have it?
Yeah, I also said it in chat. It's under general settings on phone.
Okay. So you have to do that for every trade? It doesn't stay set? I've never.
I'll be honest, this is my first time too. So I was looking for it and I found it.
Okay. I've never.
This is funny because this has never happened to me before, and like, yeah, this is like a new thing. So, general
I've
settings.
talked
If you
about
would
mark
have
price.
entered,
Yeah, I've
if
talked
you
about
had-
mark price many times before, but I've never actually changed it on my phone. And on my phone, all of my open positions say mark price.
Did you enter the stop loss after you were in the trade, Sim?
No, I always enter it before.
Are you sure it's not the other way around, Bill? Because I never I never put mine in before.
No,
I always
so
do it
when you're and I don't use my phone, and this is a good reason why not to use your phone, really, especially when you're brand new. But when you set up a trade on Phemex on Chrome, if you go to TPSL, it defaults to mark, which means you're protected from the whales. Mark is the average of the top 5 exchanges. If you enter the trade and then go below the chart and add a take profit or a stop loss, it will default to last price there, which is the price on Phemex where the whales have more influence. So if you entered your stop loss after the fact, you are more at risk. You have to remember to change it back to mark price to protect you.
Okay, so I'm on Phemex on my phone. And I'm sorry, like I didn't know that there was a difference between being on your phone and being on online. I know it's easier to see things, but I have for months been.
When you click
putting trades
advanced
my
on your
phone.
phone, Sim, when you click advanced, do your TP and SL, it shows mark price, take profit, mark price, stop loss, mark price, or last price with the drop down window.
So I just put a small order in for a long on XRP, and I'm seeing my trade right now. Where should I look on my phone?
Well, on the open position, it should say XRP, long, and then underneath that, it shows the unrealized gain. Underneath that, you see the TPSL and trailing stop buttons down below?
Yes.
Right above the trailing stop button, it shows you whether it's mark price or not, what the mark price is.
Oh, it doesn't say mark price anywhere. All it says is entry price, last price, size, realized P&L, margin, estimated liquid price.
All right,
Liquidation
now
price.
go like you're going to enter another trade, like Ethereum or something. Just pretend like you're getting ready to enter another position. Click the long button.
Click the long button.
Oh yeah, before you even do that, pick XRP. You can do XRP still.
Yeah.
Underneath that, available market, and then your amount of contracts. So underneath that, click the TPSL button, and then to the right of that, click advanced.
Okay.
And then you're going to see you can go long, but underneath that, you can put your take profit target and your stop loss in. And to the right of take profit and stop loss, it says mark or last. You want to switch
No,
it?
mine doesn't. It just says take profit, stop loss, applicable. It says applicable to entire position. It says take profit, stop loss, but there's nothing that says mark or spot or anything like that.
Oh, are you on, I'm sorry, are you on a, you said you were on coin margin or USDT?
Coin.
I mean, I see it clearly on mine. I don't know why. And when I click
You on
advanced,
an
maybe you
iPhone
need
or
to
an
upgrade
Android?
your. Let me just show you real here. I'm going to take a screenshot and show you.
Don't see it on mine either.
Yeah, I'm on
I think it's an
Android.
Android thing, boss. I think it's an iPhone
Ah.
Android thing. I think Josh is right about that. What are you on, Sim?
I'm on Android.
Yeah,
That's why. No, I'm just kidding. I don't know. I didn't know that was. But
There are little
I always
things
blame
that are
everything on
different.
Android.
I'm
Hey,
sorry,
Nick.
Just
guys, for
share the
taking up
screenshot
all this
on
time,
page
but
chat.
this is weird. Yeah.
One at a time. One at a time.
Let me show you. Let me just show you real quick.
Mike's so
And
nice.
here, boom. You're going to see my Facebook for a second here. Let me just go here, pop this up here. You see my screen?
Yeah.
Yes.
I click to place a trade. And right here, take profit SL, mark price. There's two drop downs. I could switch it to last or mark. This is on the advanced setting on my phone. Coin M.
Oh, got it. So, okay, now I see it. You're right.
But there are differences between the laptop or your PC and your
Yeah.
phone. Because I just looked at one of my trades, deleted the stop loss, added it on my computer, and it went to mark price. Redeleted it, went to my phone, put it in there, stop loss, same stop loss, and then it put it at mark price. So the phone is allowing you to put it at mark price, or at least for me anyway. And I didn't change anything. So they're not communicating very well. They don't have a very synchronistic system between the
Yeah.
two.
When I go to look, mine are already on mark, no matter whether I try to trade Bitcoin or XRP or anything. So I think once I set it, I never changed it again. I've never had, I mean, I did change it at one point, even on when I show you guys the actual chart here, I put it up here on mark price and it's always stayed there. I've never rechanged it. But so that's kind of weird. So I'm sorry that happened to you, but you want to try
On
to.
Phemex, mine have, I think they've just always been on last. I've never had it on mark. And so now I see it now. So I appreciate
Yeah, no problem.
But can you just a little review is why does it need to be on mark instead of last again?
Mark price is the average of the top 5 exchanges. Last price is the price on Phemex. Being the average of the top 5 exchanges, it will protect you from whales, right? A whale on Phemex CoinM, there's not as much volume on CoinM. There's not as much money. So someone could come in with a couple $100,000 and move the whole market around at once and take you out at your stop. Mark price prevents that because it's the average of the top 5 exchanges.
And that's what happened to me this morning is some whale on Phemex.
Yep.
Yes. But now you know that exists and that there are those wicks and that you might be able to take advantage of them. I mean,
yeah. Now there's nothing wrong with seeing those wicks because I've seen them on my phone too, but I wasn't in a trade. And who knows, maybe the setting was on last. That's why I saw them. Because when I look right now, I see that wick on my phone, but I do not see it here on my computer. So, but I'm still set on mark price on my phone, so I'm not so sure. But you see the wicks, so it's kind of strange. I'm not so sure.
Yeah, that's just the chart that's on last on your phone. I don't know how to change that. I've been looking, but I think the chart is still defaulting to last. But your trade, or my trade, the stop loss.
You really want to leave the chart on last. You really don't want to change the chart itself, just the stop losses. If you change the chart, if you change the chart to mark price, your indicators will break. Your Heikinashi won't work right. So I would leave the chart alone. Just worry about your stop losses.
Yeah, just make sure when you enter position, you put it on mark price.
Nico, would you mind
so everyone knows, on my phone, I changed them to mark, and then I got out of it, and then when I went to go put another trade in, like it was on mark. So you can that's what I thought because I've never changed mine. You don't have to I don't have to change it anymore. But I had no idea about this. This is so weird.
Have you guys ever noticed too, those long wicks don't actually sometimes count? Like I've had a long wick hit my stop loss and it didn't stop me out.
I've had that happen too.
I've had that happen too. But only because it seemed like it was so close. But yeah, definitely a long wick came in and didn't take me out. And I've been weird. It's happened once or twice.
All right. Well, hopefully we can prevent that now. Kareen, go ahead. And I think there was another young lady trying to ask a question.
Yeah, I was saying, can I take a screenshot of your phone where you showed it? Because I don't see it on mine either. And I have it on the phone too.
Yeah. Mm-mm-mm.
Hey, Bill, thank you for pointing that out on the last price on the chart, because I didn't have market price on my chart. I just had last. I had three choices, but pointing out that keep it on last on the chart and then make the changes on the stop loss. Thank you.
Yeah.
Now, Karine, in order to see this, when you go to place your trade, you have to click advance right next to TPSL.
Okay. Yeah, it's not coming up for me.
What do you see?
Do you actually have to put like I have a market order on, and then the TPSL is there, the advanced is there.
Click
and then on
advanced. Click on the green advanced word.
Okay, enter quantity. Give me a sec. Sorry, where am I? Okay, now advanced. So it should be under, I'm seeing the long short, the applicable take profit last.
Underneath that, take profit. And in the same box as take profit, on the right side, it says mark or last, right here.
Okay, under the last, when I press the last, then the mark pops up underneath. Okay.
Yeah.
Got it.
Click, yes, exactly. Then click mark. Yeah,
Got it.
it's a drop down. It's a drop down menu.
Yeah. Okay. And we do that with the stop loss as well, or no?
You shouldn't have to reset that every time, but if you go to take a trade, you might want to check to make sure that that's on mark
Right. Okay, thank you.
by just clicking advanced. And you can just click, you can just take all your trades. If you're doing it on your phone, just always use advanced, make sure that's on mark, put your take profit target and your stop loss in here, and then click confirm.
Got it. Thank you.
You're welcome.
Sorry, guys. One more time. What's the difference between market and last? I got here late.
Last price is the actual data on Phemex. Mark price is the average price of the top 5 exchanges. So when you set your stop loss to mark price, you are protecting yourself from whale manipulation on Phemex, especially in markets like CoinM that do not have as much volume, and almost anyone with a few $100,000 can come in there and take your stop. Make sense? So when you set up your stop, when you set up your stops, just make sure your stops say mark.
I've been on last for the entire last year.
So we understand correctly. I think that's defaulted. Yeah.
You would, yes, that makes sense. They do default it if you were setting up your trade in the first place, it's defaulted to mark. But the advanced, for whatever reason, is defaulted to last, and you have to remember. I'll be better about talking about that on the basic call for sure.
Does that still apply if you're using the limit order?
Any kind of stop loss. So yeah, if you can set your stops as limit orders, and yes, I believe you still need to make sure that they're set to mark.
How do you change that on for the charts? The mark and last on the chart.
The chart itself, you should just leave on last because you want to see the real price data.
How do you know that? How do you know if it's on last or mark the chart?
So here, I'll show you.
Can you show us on the phone too, Nico?
Right here, mark price, right on the top right corner of your screen. Mark price, last price. So he's saying put it on last price on your screen. Mine has been on mark price for 5 years. I'm not trading those crazy wicks.
I'm glad you don't have any issues because it usually breaks the Heikin-Ashi and tends to break things. I've had to deal with that a few times.
Yeah, maybe that's why I am having issues, but I don't have it on coin margin. I only have it on USDT margin.
Can you guys show us on the phone where to change it to mark?
I can't share my phones. Yeah, I mean, I did show it on the phone a couple of times here, but so
I think it's exactly the same setting.
What's that?
I think it's in the general settings, the top 3 little dots at the right. And you can
So
go in
let
there and get, I
let me
think.
just hold on a second, guys. I got people texting me. Let me just show you here real quick. So you go to place a trade on your phone, right? You guys see this? So let's say you're placing a trade on your phone. You're going to, right below this, right below all this, you're going to see TPSL right below this. This is the pop-up afterwards, but right below where it says market here, you're going to put the percentage you want to trade. Right below that, it's going to say TPSL. To the right of that, it's going to say advanced in green. When you click on advanced, this pops up. This is where you can change it from mark or limit, last to mark.
Thanks, Nico. That's I think we understand that it was the chart on the phone that we want to see. How can we just look at
the chart?
Yeah, the chart.
I don't even know how to do that. I've never changed it.
Okay.
I don't know. I'll have to look into that, or we can try to figure that out. But someone said in settings, but I don't know. Let me get back to Tanika. Tanika, you tried to talk earlier. I don't know if you had a question or if you were trying to answer someone else's questions, but if you're there and you have questions, hop on out.
Thank you, Nico. No, Sim was saying, oh, this is a dumb question. I'm a beginner. I said no, because it was great that he asked the question, because there are other beginners on here, and I was just telling him.
Joking. I didn't think it was dumb.
Great.
Yeah. So thank you. Thank you for speaking up, because I've been doing, just to practice trades with a small amount of money. And I thought I followed all the instructions, but my stuff was set to last. And I noticed that last time I was in there, and it caught my attention, but I didn't know what to do. And I know that either Bill or Chad or someone in the trainings did say something about mark versus last, but I wasn't sure what steps to take to make those changes. So I'm glad this came up.
Awesome.
Yeah, I'll be better about covering that in the basic call. That's going to get front row attention.
Yeah. Today, guys, at 2 p.m. Eastern, Bill's basics call. Get on there. It's great, especially if you're relatively new. Even if you're not new and you just don't know these little tiny bugs and tiny things that you can do to make things better, get on there and ask the questions.
Bill, if you can figure out how to do it on the phone too, like for the chart on the phone, that would be great.
I literally never trade on my phone, so it'll take me a little bit of time, but I'll figure it out.
Thank you. I'm looking right now, but I can't.
There's
find,
also
I can't find it in settings.
Yeah. Also, guys, I know you probably do know this, or you should, but Phemex itself, when you're on the Phemex site, right here up in the top right corner, this little question mark, support, click on support. This window will pop up and you can just ask for a live agent, and they are very helpful. They will answer all those questions you might have. I don't know if you have that same, hold on, let me just look on my phone and see if you have the same, probably do.
One thing that I wanted to add to the conversation, trading on your phone can be very cumbersome. The way that it requires you to go and set your contract size. If you're setting your contract size in congruence with your estimated loss at your stop loss on a percentage basis of your total account balance, what you have to do is go in, set the stop loss, then click advanced, and then like put the contracts in and go back. And then it's very, very cumbersome to the point where I've been trading for, 15 years, and I do everything I can to avoid placing a trade on my phone because it's easy to make a mistake. Really, it's quite easy. And then, but if I do have to place a trade on my phone, I will go look at the chart on my TradingView mobile app first, because the charting on mobile with Phemex is basically useless. So I would pop open the TradingView app on my phone, look at the chart setup, try to identify where I want to take the trade. And then if I absolutely have to, I'll go place it on my phone. But I'm not kidding you. I mean, it'll be to the point where like if I'm looking at something and I know I'm going to be home in 20 minutes, I'm going to wait to get home, because it's just that much easier to set your risk exposure on desktop than it is on mobile. And so I just want to throw that out there, especially if you're new. It can you can really make a pretty easy mistake that could set your risk exposure way out of line.
Can I tell you how I do it using your technique?
Sure.
Is that I've like okay, let me go to Phemex right now. So I'm on a chart, and of course the chart is total garbage. But then on the top, there's a little icon that looks like a couple of candles. When I click on that, it goes to like a little trading view chart, and then the chart looks a lot better. So I look at that, and then I go back to where to put in the trades, and then I put in a number of contracts. Then I press TPSL, and then I press advanced, and then I put my stop loss in, and then it shows me my estimated, what I'll lose. And then I look at that number, I'm like, oh, that's only $20. Like I can go up to 100. So then I go back and then I adjust my contract size again, and I go back to advanced. So yeah, it's a little bit more cumbersome, but I can do it on my phone, and I just keep adjusting the contracts until it fits, what percentage I'm comfortable with losing if it goes the wrong direction. And then I press long, and then then I can watch it from my phone. But the chart at the little icons that look like candles up near the top, that actually puts you to a trading view kind of view of the chart.
Right. But when you go and press advance, you have to go put your stop loss in again at the advanced section. It doesn't automatically populate it, for me at least.
Yeah.
And then if you click long or short, it resets it.
Yeah, I have to remember what I put in. Yeah.
You go. Yeah, and you have to do that. You have to do that every single time that you adjust your contract. You have to re-put your stop. Adjust your contract. Re-put your stop. It's just that their mobile UI could use some work. I'll just say that.
That's true, but sometimes I'm like in a place where I can't. I'm not at my computer.
No,
I'm
for
always
sure.
on,
Yeah,
I'm
I'm
always
just
on the
saying
road,
that.
and I'm like, I get a signal, and I want to throw this in. Hey, Nico. Sorry, my son's name is Nico too.
Oh, wow.
And yeah, so sometimes I have to. This is what I have to do, and I'm just lucky that I feel like I've figured it out kind of, but I do prefer being in front of the computer.
Yeah, no doubt, man.
Yeah, I know some people say that it switches from when they set mark price, it switches back to last price, and that's Phemex's way of stealing your money. And that I'm afraid to tell you guys, no matter what you think, that is not the case. I have never swapped mine back to last price. It's always stayed on mark price. I'm always on mark price for years, me personally. So Phemex last price, if you're having that problem, yes, I certainly think that they need to correct that or make it, there's got to be a way. I don't know what you're doing. I don't know what anybody's doing to cause that to switch back and forth unless you're using multiple different computers or logging in on different devices. But once it's set on a device, it remembers that. At least mine does. I mean, you guys see my lines are the same all the time. I've had people message me saying my lines keep disappearing. I don't really know what's happening on your end, but I will get to the bottom of it. I will ask our representative if there is any way to keep these settings permanent, but I've never had an issue with it myself. But it frustrates me too when someone else is having an issue with something that they think they're being singled out or something. And I'm like, first of all, especially if you're in our group, they're doing everything they can to make our people happy. But at the same time, no one else is having that problem but you, then it makes me feel like it's your problem. Makes me feel like you're doing something wrong. And I can't even know whether you are or not unless I see exactly what you're doing. So you just telling me that you're not doing something and you're having a different result as everyone else, it's hard for me to relate without really seeing it. So we would have, if you're having an issue that contradicts what we're saying here, we need to hop on a live call, one-on-one, book a one-on-one call. I'm not going to name names, but I get these messages once in a while. But if you're on this call, book a one-on-one call. Let's share your screen and see exactly what you're doing, and let's see if we can get it resolved. Because I don't want you to keep having issues with Phemex. By the way, you don't have to use Phemex, guys. There's 10 other, legit platforms out there. We have people in our group using MEXC and some other ones. You will have to use a VPN, but I have no problem with Phemex. I've not had any problems with Phemex.
Hey, Nico.
Yes.
I did an experiment, and when I switched from mark price to, like last price, my lines go away, but then when I switch back to mark price, they come back. So that means that the lines go with the type of quote on your chart. So that's why they
That's good
could
to
be
know.
going away when people change it.
Okay, I just switched the last price. There you go. Lines are gone.
Just more info.
Thank you. Appreciate that. Now I'm back to mark price. Lines are back. So it's a different chart altogether. And maybe your settings kind of get erased when you switch back and forth. Maybe you're not, maybe you're doing it and you don't realize it, but maybe, just maybe you are the one out of 100 or 200 or 500 that's actually just the charts and the screen and the platform's out to get you. I don't know. I just need to see that first to believe it. So, because every time I consult with them, every time I ask on your behalf or somebody's behalf, they're saying that that's not true. It's user error or something, or the user did this or the user did this. So I don't know who to trust or believe, but I just know that if everyone was having the problem, I would say they're lying. And I'm not saying anybody's lying. I'm just saying that in order to get to the bottom of it, I have to see exactly what's happening on your end. And don't take what I just said personally. I want to help you get this result. I want to make sure you're not having these problems. But let's book a one-on-one if you're having an issue that doesn't seem to be resolved with what we're saying here. With that being said, go ahead. Anybody else have any other questions?
Hey, Nico, if we are on another platform like MEXC that only offers last, fair, or index, would you say can keep it on last?
Yeah, I mean, yeah, but
in the take profit area?
I mean, last, what was the other options?
Fair and index?
I would say fair is probably market or mark price.
Okay.
Because on mine, I have those same options, except for instead of fair, I have mark. So I don't know. Try it and see. But I can't really give advice on other platforms because I don't use the other platforms. I just know that they're legitimate platforms, and we have a lot of members in here that use them with success. I mean, one of our top traders in here uses MEXC, I think, but nothing wrong with them. We just don't have the same customer support that we have with Phemex, and we don't have, and you have to use a VPN with MEXC.
Nico, do all the pro platforms use the same algorithm?
No. I mean, there's a they congregate. I don't even know if that's the word. Congregate. They congregate all the, for lack of a better word, I know there's a word for it, but they congregate all of the they take all the top platforms, Coinbase,
Aggregate.
That's what I meant to say. Sorry. They aggregate all of the different data out there from all the different platforms to come up with the price. So they usually use the top 5 or the top 10. Usually, Binance is the major. Binance has the most volume. So you got Binance, you got, let me just go over to TradingView and show you. When you're on TradingView, when you go up here to look for a price or to pull up a chart, see over here, you got Bitstamp, Coinbase, Index, Crypto, Binance, Bitfinex, Kraken. So some of these platforms congregate, or I mean, I can't even remember what you said.
Aggregate.
Aggregate. I don't know why I can't come up with that word. Aggregate the data from all the different platforms to give you the data, to give you the most precise reading. So I don't know what all the other ones are using, to be honest with you. It depends on their personal volume as well. How big they are as a platform, how much liquidity they have on their own platform.
Okay, thank you, Nico.
We have to do some research on that. I'm not going to just give you a blanket answer because I don't really know the answer to that. Which one is better as far as aggregate? But when I go to TradingView myself, I usually pull up Binance or Coinbase because they're the largest platforms and they aggregate from the most sources. All right, so someone else had some other questions about something else. Let me just scroll up here. Somebody wants to know something that we don't normally discuss on these live calls, but because it's a thing now, because of the ICO, or not the ICO, but the nodes that we mentioned, someone wants to know how to stake. So let me just show you real quick. For those of you who are in the ICO, Optio, you go into your Kyvo wallet, sign in. I'm up to a grand total of $110 now. Great. So let's go over to distribution. I have all of these that were distributed, and now I have 2 pending. And see what happens is that in tomorrow or the next day, maybe on the 11th, I'll have a new one distributing. This one will be distributing, but I'll have 2 more pending. And then the next day after that, I'll have a new one distributing. I'll have 2 more pending. So that's how it works. You're always going to be 2 or 3 pending days. Okay. I have 18,498 Optio tokens that have been minted or mined since the first. So it's growing. I'm earning 2,470 tokens a day approximately. If I go to home or assets, whoops, not the wrong thing. Click the wrong one. Let's go to home. Click on assets, click on, let's see here, stake. You got balance, distribution, stake. If I go to, okay, no, stake up here, I'm sorry, stake. Up here, stake on the top right, if you're on your PC. On your phone, it's a little different. Then you're going to have to pick a validator, right? So there's several different validators that are popping up here. You want the one with the lowest fee and the highest uptime. They all say 10% fee and 100% uptime. So which one should you choose? People have chosen different ones in here. Obviously, there's some that say Optio, some that say Maximus, one that says Alien. But let's just say I pick this one. Okay, then how much do you want to stake? If I stay max, it's going to put the total amount of tokens that I've earned so far minus the ones that are pending. Right? Unstaked wait time is 21 days. Rewards paid every day starting day 1. So immediately, if I click send, I'm going to start staking this amount, and it's going to start giving me 20% more tokens based on the ones that are staked. But if I want to unstake that ever in the future, I got to wait 21 days from the time I unstake it before I can have access to it. So just keep that in mind. Me personally, I have not staked anything yet. Doesn't mean you shouldn't. You do earn more tokens when you do, but I haven't. But let's look at the price of Optio. Optio's went up 2x just since we started this 10 days ago. Now, I'm not going to say it's going to continue to go up because it actually was higher, 3 months ago, 4 months ago, and it's come down. But obviously, they're doing a lot of promotion, marketing for this. We're at 0.008 cents now. I believe when we got in, it was, let's go to 30 days ago. We were down here at 0.0037 or 38. So nice little uptick. So the value's doubled and tripled over time. So you're minting tokens that are actually going up in value at the moment. Could it dump back down? Sure, everything's possible. I don't know. It's going to take time for this to take off. There's no promises or guarantees, but that's how you stake over here if you're on your PC. Did that answer?
What's the risk to staking? Is there any risk? I mean, that you would.
No, you're basically, what I understand, you're kind of loaning your tokens, and they're paying you an interest rate on the extra tokens. But you just have to wait to unstake them. It's not like if you go put your money in a CD at the bank, you can't go in a week later and say, you know what, change my mind, give me my money back. I mean, you could, I guess, but I don't know how long it takes. But I don't think you could just you sign you go for a 1-year CD. You got to wait the whole year.
You'd be penalized.
You get penalized, yeah. So, but
For
here
early
you got to wait.
withdrawal.
I'm sorry, say again.
For early withdrawal.
Yeah. So there's penalties for that. As far as risk, you're not going to lose your tokens. They're not leaving your wallet. It's still going to show up in your wallet. They're just being staked.
Nico, when you
go ahead.
When you stake, I noticed that you have to select a validator, and there's a big drop-down list.
I just went over that. Yep.
Oh, I'm sorry. Thanks.
Just pick one. Which one is the best one to pick? I can't answer that. I guess all of the options here that they're giving for validators are here for a reason. I'm pretty sure all it says here is put your money in a savings account, but instead of earning interest, you help secure and support. It says choose a validator with a high uptime and low commissions for best results. They all have the same uptime and the same commission, the same fee. They all say 100% uptime and 10% fee. So Alien sounds cool, but Optio makes sense, but there's several Optios. So which one's which? What is a validator? Who's the one? So I don't know. I'm going to learn more about this before I stake. I'm not worried about personally, but I mean, I'm pretty sure they're all safe or they wouldn't be here. But
Nico, are you?
I will get an answer to that. Go
Sorry,
ahead.
Nico. Are you staking? Are we staking every day for getting new coin every day?
You have to stake once you stake it. Are you asking?
Like,
Do you
as
have to
you
keep
keep
staking?
getting new coin every day, do you just keep staking every day?
I think I'm pretty sure you do need to do that. Anybody went through the process of staking yet?
Yes, I've staked, and I staked when I got a bunch of them at first, and then I staked the next day. I staked the next day, and I staked earlier this morning. So you can stake once a week, once a day, once a month, however often you want to, but it'll just be the new coins that you're minting every day.
Right. I
And
imagine
also,
to maximize, you do it every day as soon as they come
Yeah, because if
out.
you don't,
wanna
then you're
maximize.
going to have some that are accumulating that are not staked.
Right. Okay. Thank you.
And also the 10% fee doesn't take, say if it's 20%, doesn't cut it down to 10%. It's 10% of the 20%. So if you were going to like one node getting 20 extra tokens for your 20% of 100, you would pay 10% of that 20, which would bring you to 18%. Does that make sense?
Yeah.
I saw somebody post that in the ISO as well, ISO channel as well. So I just wanted to clarify that if they were on here.
Cool. Thank you. John D. Nico, are your trades isolated or cross margin? Always isolated. That looks like it was answered a couple times. I trade on isolated, but that doesn't mean you can't or shouldn't trade on cross. You just need to understand what the difference is and why you would. Chad and Bill and a lot of people trade on cross leverage, but you isolate your risk to your margin, which is the amount you're risking on the trade. Cross allows you to go much further negative because it's also dipping into your available balance besides what you're risking on the trade. So let's say you have $10,000 in your account and you go cross leverage, but you're only risking $1,000 margin. Well, let's say you go negative. If you're isolated, you're limiting your risk to the $1,000 that you're risking on that trade. And then if you put a stop loss on that, you're risking your loss to the percentage of the stop loss of your margin. So if you have $1,000 at risk and you have a 10% stop loss, you're risking $100 approximately. If you're on cross leverage and you have $1,000 at risk and you have a stop loss at 10%, you're still only risking 10% of your margin. However, if you don't have a stop loss, so a stop loss protects you either whether you're cross or isolated. But if you don't have a stop loss and you're on isolated, the most you can lose is your margin, the amount that you're risking. But if you're on cross and you're not, and you don't have a stop loss, the most you can lose is everything you have in your account.
So what's the benefit of cross versus isolated then?
Anybody want to answer that? Bill or Chad?
You can move your liquidation very far out of the way if you have enough available balance. That allows you to have very deep stops and still use high leverage. So come to the basic call. I'll walk through it in great detail.
Okay, thank you.
Yeah, get on the basis call, guys, which is right after this call at 2:00. And definitely good questions, by the way, guys. Let's see, JD, is this what you mean? I don't know what you're referring to. Let me go and look. JD to everyone, is this what you mean? When you oh, you posted a picture. Let me just see.
This is a question for William again. You were talking about the Optio and the staking, something about staking and going from 20% to 18%. Could you repeat that?
You're getting 20%. You're getting a 20% return, but they have a 10% fee. So the fee comes out of your earned tokens, not your overall balance. So if you have 10,000 tokens and you're staking 1,000 and you get a 20% gain on those 1,000, you're paying 10% fee on those 1,000, not the 10,000 you have in your account. You're paying 10% staking fee for only what's staked.
I got it. Thank you.
Yes, sir.
I would like to say also, I heard you mention that one of the traders used MEXC, and I see a lot of the members using MEXC. But you have said before, don't put all your eggs in one basket, because one actually member did have a problem on MEXC where they held up his account. So it might be a good idea, like you say, not to put all your eggs in one basket, Plus, I think that it's an advantage having Phemex just because you guys actually have a little bit more leverage over at Phemex versus MEXC. So I just wanted to put that out there.
Yeah, thank you. Yeah, guys, you're welcome to use whatever you want out there. I mean, Chad and I share the ones that we've already vetted and we know that are legit. There's like 4 or 5 of them. There's probably more that are legit out there. In fact, I know there is some that are legit that are not on our list, but we haven't vetted them. We haven't looked into them, and we just can't recommend anything that we don't already know that is a time-tested and proven platform. MEXC's legit. They've been around. Optio is actually listed on MEXC, and I can probably get Optio listed on Phemex, and I'm working on it, but Optio is working on getting on major exchanges as well, like crypto.com and Coinbase. So I'm not overly concerned about trading Optio on Phemex, but and a lot of times these platforms, guys, they charge a fee. They'll list almost anybody if you pay them. So you got to be careful with that too. It's just because it's listed doesn't mean some of these are risky tokens, right? So, but there's nothing wrong with MEXC, and you can trade with much higher leverage, but that doesn't mean good. That's not a good thing either sometimes, unless you know what you're doing. That's why you see some of these trades in the wins wall with 300x leverage or 500x leverage. I mean, 2x leverage is high. That's twice as much money as you're playing with. So imagine 300x or 500x. You just got to be careful. If you have $300 on your margin and you're trading at 300x leverage, you're trading $1 of margin. You're risking $1. So unless you add more contracts. So you're really, the higher the leverage, you have to add more money in order for that to actually matter, unless you just want to take a really small amount, like $1, $5, and $10 and go with 500x leverage. Okay. It sounds good. It looks good on paper. The wins wall looks awesome, but how much are you really risking on those trades? And that might be a good point.
Can you repeat
Don't
that
risk
again
much.
about, can you repeat that again about how you got to the dollar
Yeah.
part?
So when you're trading, guys, let me just go off full screen here. Someone asked me to make my screen bigger. My screen is huge in my office here. So I got a 40-inch monitor here. So I don't know what it looks like on your end, but if you're on a cell phone, it's going to look small. Okay. So up here, guys, when you click on leverage, when you're placing a trade, see down here, I got on BTC, I'm at long 20x leverage. Let's just go on Bitcoin. This one right here, which is a Bitcoin margin. I am at 20x leverage on this trade. I am in profit. I'm at 51%. On my Ethereum long position, I am up 70%. But on this one, I'm at 20x leverage. So let's just do the math here. I got 2,918 contracts. So I'm playing with $2,900. But if you take 2,900 and divide it by the 20x, I'm really only risking $151 of my own money. 151 times 20 equals 2,900, right? Approximately, give or take the fees and stuff. So whatever amount that you're actually going to risk as your margin, if that's exactly what you're risking with no leverage. But as soon as you add 1x, 2x, 3x, 4x, 5x leverage, you're dividing this amount, the contract size, you're dividing that amount by the amount of leverage. So you go really high leverage. If I change this up to 100x, this is going to go down to $2.90 over here. So how do I get around that? Well, I would have to add a lot more contracts. I can go 100x, but then I would have to 10x this or 100x this in order for this to stay at $150. Does that make sense at all? So your leverage, guys, when you go high leverage, just remember, let's say you want to bet $1,000 on this trade and you want that to be your margin, $1,000. If you have zero leverage at all, then you will have $1,000 on that trade. But as soon as you go to 10x leverage, it's going to say 10,000 contracts, but the amount you're risking now just dropped to $100 because it's $1,000 divided by 10. So in order for me to combat that, I would have to go 10x leverage and then increase my contracts by 10 in order for me to still be trading with $1,000. A little confusing, I know, but once you do it a few times, you'll get it. Get on the basics call and ask Bill to show you how to do that as well. Bill is the master of, he does that with cross leverage. And I think a lot of people get confused with leverage, thinking you're going to make more money because of leverage. But really, think about this, guys. If I have $1,000 on the trade and I have 10x leverage, that means I'm risking $100. I'm playing with 10,000 because I went 10x leverage. So it's my 1,000 times 10 on the contract size, but it knocks my risk down to 100, my margin. If I did that same trade as you, let's say you did that with 10x leverage and I did the same trade with no leverage and it went up 10%, I would make 10% on 1,000 and you would make 10% you would make 100% on 100. So you would make $100 profit and I would make $100 profit. Our ROI would be the same. So when you increase your leverage high, in order for you to also increase your profit high, you need to increase your contracts when you increase your leverage. Changing your leverage, you might make more percentage gain, but you're making a higher percentage gain on a smaller amount of money divided by the amount of leverage. So to me, it's the same. Unless you increase your contracts with the increase of leverage, you'll make less money with high leverage. You'll have a higher percentage gain, but you'll have a higher percentage gain on a smaller amount. Does that make sense?
That's very confusing.
Yeah, it's like you're betting more money, more contracts, but you're reducing the amount of margin that you're playing with the higher leverage you go. So here's how you combat it. Let's say I want to switch this to 100x right now. I'm just going to click on that 20x and I'm going to slide this to 100x. Or let's say I just double it to 40x. Watch this. I'll do it just for this example. I'm going to switch it to 40x. Double what I just had. Okay, now look down here. It's 20x and I have 2,918 contracts. And over here, my margin is $151. As soon as I switch this to 40x, watch what happens. Confirm. Boom. My 150 just went down to 76. So what just happened? Now, in order for me to get back to $150 at risk, so in other words, I'm at 40x now, which is double the leverage. So if this does what I want it to do, and let's say it goes up 10%, or let's say it goes up 100%, just for the sake of this example, I'm going to make 100% on $76. But if I would have left it at 20x, I would have only made a 50% gain instead of 100% gain, but I would make 50% on $150, which is the same as 100% on $76. So how do we combat that? Let's say I want to still make 100%, but I want to do it on higher leverage. Well, as soon as I change the leverage to 40, now I have to go add contracts to this. I need to double that too. If I'm doubling my leverage to 40, I need to double my contracts. So I come over here and I add another 2,900 contracts just to double it, right? I click long again. Watch what happens. My entry just went up higher now. Now my percentage gain is still high. I'm still at 50% because half of my order was down here. The other half is up here. But now I'm trading 5,800 contracts, but now I'm back up to $150 of margin. Now I'm at 40x leverage with the same amount that I was risking before. But the only reason why is because I doubled my contracts. Because I double my leverage, I'm doubling my contracts. Now you're back to where you started from with higher leverage. If you just change your leverage higher, you're actually risking less. So let's say you did that by accident, you didn't know, and you just increased your leverage because you're in profit and it shoots up. You're gonna be like, damn, I just killed it. I just made double the amount because I increased my leverage. Yeah, you did, but you made double the amount of a smaller amount, double amount of half, because you didn't increase your contracts with that change. And you might say, well, I made 100%. Why didn't I make $75 or $150? That's because you doubled your leverage without doubling your contracts.
Nico?
Yes.
Without doubling your contracts, if you just add to your margin down there, what does change then?
Good question. Because you can just come right here, guys. You can do that. You can come right here and click this little pencil and literally increase your margin. Bill, are you still on?
Instead of
yes, sir.
Explain
adding
what happens when you do that.
margin. The only thing that happens if you add margin is you move your liquidation away. So potentially you're just risking more capital for the same trade for the same amount of profit. So adding margin only really works if you're, in a long-term trade or you're trying to use a longer term, deep stop sort of strategy or a deep liquidation as your stop strategy, and you'd add to the margin. Then very specific use case. Very, very rarely will we add to margin because it does not make you more money.
Yeah.
Does
Now,
it move your,
Wouldn't it
does
be
it
safe
move your
to say that,
liquidation?
like, in order to
Too many at once,
like
one at a
get
time.
Hold on, guys. Too many people talking. Zach,
Does
go
it
ahead.
move your liquidation?
Yeah. So
Adding
watch this.
margin. Yeah.
I'll do it right now. So let me
That's
just
no
come down here and
simple
increase
fix.
my margin. I'm going to show you. It's 151 right now. So look at my liquidation. My liquidation is right here at 89,367. That's my liquidation. 89,367. If I just want to, now I already doubled my leverage. So maybe I want to stay at 40x and I don't want to increase my contracts. So I go here and let's just say I add another, I don't know, $150. I can't do that. I gotta do it in BTC. Hold on one second, because I'm on a Bitcoin margin. How much is $150 with a Bitcoin? Is it 0.0008? I think it is. I think it automatically did that for me. So let me just confirm. Yes, I just went up to $225. My liquidation went further away. It was up here. Now it's down here a little further. So I gave myself more room. Now, with that being said, if this continues to go up and hits my TP and it goes up, 20% more, let's just say, am I making 20% more on this margin, or I'm making 20% more on the contract size? Hold on one second. Someone's texting.
There's no cheat in the system. If you're going to go for big air, you have to go high leverage, high margin.
Yeah.
Right.
Yeah. So some people
you
used
can't
to
just
ask me,
cheat the
Nico,
system by doing 100x leverage. Well, your margin's going to be small, so it's the same as going 10x leverage with the same margin. If you're going to go for it, you better be sure on the trade and go for it. But there's no cheat in the system with leverage.
That's right.
Or is the best use for this just if you're in drawdown and you just have the feeling like it will turn around, just to give yourself a little space? Is that the only good use case for increasing margin?
Yes.
Yeah, it gives you a longer way to hang yourself.
Exactly. It gives you
Basically,
a bigger rope
to
so
hang
you can-
yourself, if that's
you can
possible.
dangle longer.
That's like the life of XRP. It's just
Plan
But
the
if you have
trade
a-
and then trade the plan. That's what I always say in the basic call and the onboarding. Plan the trade and trade the plan. And don't give yourself more rope to hang yourself with. Come back with a different plan.
Yeah, I learned the hard way. Stop losses is very important. At first, you don't use a stop loss because you figure the liquidation is like put you very far away and cross, but then the stop loss protects you pretty much. So it's always good to use a stop loss. Unless you're hedging.
Right. And then that's a whole different game. I'll let John teach that one. It's a lot more intricate.
Yeah. So guys, people used to ask me, Nico, if I'm up 100% right now and I change my margin to 100x and then close the trade out, will I make more money? No. It would have to, if you change to 100x from, let's say, 20x, you would have to wait for it to continue to go up. Then you would be in more profit, but you would be in more profit at a lot less of a margin. I know it's confusing sometimes. But you know what you can do, and what you should do is probably just learn how to trade and keep everything the same until you get this down and you understand the basics before you go experimenting with high risk, high margin, high leverage. Hold on one second, guys. I got someone at my
Practice in mock. That's the very best advice you can get. Practice in mock. You can throw whatever at the wall in mock. You can set it to 100x. You can set it to, you know, the entire $5,000 they give you. If you want to see what happens, if you want to see how you can move a market with the right amount of contracts, mock is a lot of fun. I would practice in mock.
But remember, it's the easy version of the video game until you move up to the actual trading, which is the legendary.
Yeah, it's not the same 8 seconds, right? It's not the same. It's not. So the mechanical bull is not the same as the bull, but it's good practice.
It's good analogy. Yes.
Definitely.
Basically, to get the most amount of contracts on the board with the least amount of margin, you just up your leverage. But
Yes.
but
No,
it's
you
gonna
have to
cut
you have to increase contracts, which you can do without increasing your leverage. So if I increase my contracts,
then you're better off wait till it comes down to where you enter and then add contracts. Then it doesn't move your price that much.
yeah, to be honest with you guys, I know I always warn against this and I always tell people because everybody seems, I think it's greed or something. I'm not sure what it is, but it's a normal thing to want to make more on a trade, especially and have to increase the amount you're making on some of these trades. Because some people do get this down and they're like, okay, I've had like 10 trades in a row, all winners. Now I want to increase my margin, increase my leverage, increase everything. And then they start doing it. They're like, I made 80% on that trade, but I only made $2.60. Why? What happened? And that's because you took your leverage up so high, you knocked your margin all the way down to, hardly nothing. You did make 80%, but you only had 60 cents on that trade. So you just have to understand when you change one thing, guys, it's a barometer, it's like a barometer. When you adjust your air condition and you put the heat on and you switch the temperature or the desired temperature to only for the heat to go on when the temperature hits 74 degrees, let's just say, because you want it to stay under 74, then you got to just remember you're adjusting all these different factors happening. The temperature has to get to a certain temperature before it kicks on the heat. And then if it hits 74 degrees in the house, it automatically kicks off the heat because you have these barometers set. So it's kind of like similar in here. You got all these different barometers set. So you're kind of balancing a couple things here. You're balancing your leverage with your contract size and your margin. Your margin is what you're risking on the trade. So if you decide you want to risk $224 on this trade, but then I go over here and I change my leverage, that's going to adjust my margin. I got to make sure that if I'm going to increase my leverage and I want my margin to stay at 220, I got to add more contracts. You just gotta play with all that. And you can do that up here, guys. You can go up here to when you're first placing your trade up here, right over here. You click on that and you can play with all these parameters here. If I'm at this much leverage, this size, my entry here, my exit here, and it's going to tell you all the details here, your liquidation price, your target price, everything. And it can break all this down for you. Or you could just do it down here. You can look and say, oh shit, I just increased my contract, my leverage and my contracts I increased my leverage and my margin went down. In order to get that back up, I got to go add more contracts accordingly. So if you doubled, meaning 100% more leverage, then this doubles in half. If you only went up 10% on your leverage, and this only goes down 10%. So you add 10% more contracts. It's not that difficult when you understand what's happening, but once you get it, then you can go and adjust for that. Just notice when you have an open position, look over here. Is that the amount that you really want to risk on that trade? And if you did increase your margin, your leverage, is this the amount of contracts you want to? If I want this to be $100 more or double what it is right now, I just got to go double my contracts. That's all I got to do. I don't have to change anything else because of the leverage that I'm at. Anyway, let's get back to trade. Get on the basics call for those kinds of basics questions, guys. Bill will be happy to explain it again. I don't know if he'll be happy to explain it again, but he'll explain it again.
I absolutely love it.
Chalk says, how do I get market cipher chart on to TradingView, you have to buy the license from Market Cipher. They are a separate company from us, guys. I only have it in the Discord group because I have it and I like it, and it is probably the best. It's probably the best. Whoops, let me go over here. I'm trading chat. It's probably the best indicator bundle out there. Official links. So you go to the official links channel and you scroll up to Market Cipher. If you click on this, it's going to take you to Market Cipher. And then here you can choose the plan. They do charge a fee, guys. It's not necessarily cheap. I know they had a special a little while ago. I think it was Thanksgiving special where it was like 65% off. We talked about it on this call. That would have been a great time to get it. I don't know if you could still use that code or not, but if you click somewhere around here, here's the pricing right here. You don't need this, by the way. You know, we're teaching you how to trade and all that stuff, but this, you know, Market Cipher is pretty accurate and it does work. But here's lifetime access, 600. Here's annual. If you do this and you're trading 2 years from now, you're going to wish you did this. But they did have a great discount the other day. I don't know if it's still going, but you can try it. I think the coupon code was gobble gobble or something like that.
Yeah, I think it was gobble gobble.
I don't know if it's still active or not. But yeah, so now once you pay for that, guys, they're going to email you and ask you for your TradingView account information, and then they're going to add the license to your TradingView. So then you go to TradingView, and then you'll come up here to indicators. Right here, indicators. And then it's just going to show up here in the locked licensing. So that means they've added that license to your indicator, you do have to believe, you do have to be, I'm sorry, can't even talk. You do have to be at least a pro member, I think, on TradingView, which is a monthly subscription to TradingView. I'm not sure the exact price at this point. I think I paid $14 a month or $19 a month, something like that. And this is it down here. So let's just look at it. What's going on with Market Cipher? We got a green dot down here. We got the money flowing out on the 1 hour chart right here. We do have some volume. We do have some buying pressure coming back in. And if we look at what's going on the actual chart, I mean, it is downward trending. There is a downward trending. This could be a bull flag at the moment. This looks like a nice bull flag to me. So we're waiting for a breakout to the upside. This is Bitcoin. But look what's happened also, guys. So we have a bull flag. What do I always say? Bull flags tend to break to the upside 70% of the time, except for when they are up against major resistance. Are we up against major resistance here? I think so. We got an overall downward trending resistance line going all the way back to the all-time high. And we are not only hitting that, but we're hitting that at the exact same resistance level as this horizontal resistance line where we had support, resistance, and we're hitting them both. So it is possible for this to break to the downside, but we also have the Fed rate cut announcement, which I think is going to be a cut, and this could cause some volatility. We could hit this and then break to the upside and finally be broken out of this downward trending channel. But if not, we could just come down and stay in this channel. And if we break to the downside of this, guys, well, let me show you what will happen after that with Bitcoin. If we break to the downside, we'll just continue this downward channel, and it will look like this. Boom, boom, and slowly come back down to the bottom of this downward trending channel somewhere down here to retest what? The magical 70 to 73.5 zone. That would be the next stop. Actually, we do have some support and resistance right here at 78, but I think that if we get down in this zone, guys, it only makes sense to retest that level. So if we look, and that's only if we break to the downside here, I think, you know, we have a very good chance of breaking to the upside. We have a night, I mean, there's a couple things here though. Look at this on the daily. Not only are we in a downward trending channel, but this is technically a bear flag hitting resistance on the higher time frames. That's what it looks like. So if we break to the downside, how far can we go down? Well, let's just look. I mean, if that really is a bear flag, let's just look. Oh, I don't know. Right there. Kind of makes sense, right? These things kind of all add up. But that would bring us down into this zone, guys. This was major support and resistance zone that I've had on this for a while, which is it's the 77 to 73.8 zone. This is where we hit major resistance back in pretty much a year and a half ago at 73.8. This is what we broke through. We hit resistance again here and we broke through, and we came back and retested this. We retested the 78 right here and then doubled down basically all the way down to 74.5 before climbing out of this falling wedge. Chad was given long signals in the group right here at 74.5, and that pumped to new all-time highs. This is technically another falling wedge. It could be looked at as a falling wedge very similarly, depending on how you want to look at this. But either way, if we do another similar falling wedge, we could retest this same area. Unless this was it. Unless this 80K right here was the bottom, because that is major support as well. Down, we hit it here, but we did dip further. So there is some support there. And it is the downward trending support line. And then we climbed up, creating higher lows and higher highs, but we're coming into an apex right here. We're coming into a little wedge. And so we need a breakout. So let's see what happens in, 35 minutes or so, 30 minutes, 25 minutes or so on the Fed rate cut announcement. I don't think it's a rate hike announcement. It's a rate cut announcement. There will be a cut. I believe it'll be probably 25 basis points. I don't think it's going to be more than that. And I don't think it's going to be an increase. What is that going to do to the market is the question. But look at that. It does look like we're actually on the daily created a new candle above this line. That has happened back here once, and then we dropped after that back in. I mean, if I really adjust this to be exactly at the top of those candles, then maybe we didn't break out at all yet. Maybe we're just wicking up to it right now. On the daily, that makes more sense. But I had that line drawn because on the lower time frames, if I go down to like the 4 hour, it looked like before, for instance, that we broke out and we're retesting on top, but we may not have even broke out yet. If I'm really, really, really precise. But we are coming into it, guys, right here. So we have resistance, we have a ceiling, we have an upward trending floor. And how does this normally break out, guys? This pattern here. Upward trending, hitting resistance.
Down.
If it wasn't for the downward trending channel, I would say up. But it is a bearish flag. This is major resistance on the way down, guys. And we are downward trending. And not only that, but we're certainly not in a hurry to go up. There is no volume. There is no buying pressure really. I mean, look how long it's taken just from here to here. It's taken like 3 weeks. And the candles are getting slower, smaller, and tighter. Look how tiny these little candles are getting. That's usually winding up for a breakout. It is coming into an apex. It is up against major resistance and support. I think a breakout is imminent. The question is it going to be on the upside or downside? A couple bad things.
Could this Fed announcement be a catalyst for a breakout up?
Yes.
And also, quick question about news. When we do have like FOMC coming at 2 p.m. Eastern, do we usually sometimes I see like movement right at 2 p.m., which is funny because like the announcement is just barely coming out. Like it's not.
Yeah,
it's
that's like I said earlier. That's just anticipation. Yeah, that's anticipation of a decision. Those are just people guessing or getting in or out or selling off their position or getting out before the announcement because they're just mental. They're in their heads. They don't know what's going to happen. So there's a lot of, that's why we call it the whipsaw action right before the actual announcement. And usually what happens is that it will go like this, boom, boom, up and down. It'll break through the up resistance and below the bottom support. And then it'll just come right back to where it was and stay in that little same upward channel. That's usually what happens with the whipsaw. But this whipsaw could take you out if your stop losses, your TPs are too close. So if you're already in a position, you want to be aware of that. Now, if we have a big drop below the support and then another candle that drops a little further, then chances are we're breaking to the downside. Same with the same to the upside, but I don't know why it would. Anybody else want to give their opinion on that? But
Well, when news seems like it's gonna like it's all across the news, Fed is gonna cut rates like 125, like it's gonna happen. So wouldn't the whipsaw action be positive? Wouldn't it go up? Like why would
there's no rhyme or reason. Trump is getting ready to speak at the Bitcoin conference, the biggest one in the world. He's bullish. He's bullish Bitcoin. He's bullish crypto. And as soon as he starts talking, the price drops through the floor. It doesn't make sense sometimes. People anticipate. I don't know what people anticipate, or people are betting against things, or maybe that was a government. I think that when that happened, it was actually the Biden administration dumping a shitload of Bitcoin that they just seized from some government seizure. And they probably did that to make him look bad. But you never know what the reason is. But it's better to not be in a position leading up to 2 o'clock and then, wait for the fallout if you're not already in a position. But I'm already.
Is that your strategy though? When you something's coming up in the news, like do you kind of stay out?
If you're not in already, yes.
Because Chad, I know Chad says, like there's some good entries right now, but I'm gonna wait for this Fed decision before getting in here.
Yeah, I mean, I am long, I am in, and I am up 51% on this Bitcoin long right here.
But you have been for a while.
Yeah, since yesterday. But I knew the rate announcement was coming. But when I thought we were breaking out here and holding a support, to me, it looks like a breakout. If I look at this trend line, it looks different depending on what time frame you're on. But it's possible we didn't break out yet. We're just coming up to it. If I touch the tops of all these wicks here, it might look like we're not breaking up, but I think we are. I think we broke out of the downward trending channel and we're holding support. If we get above this 93.9 or I would say 94. If we get above 94, which I think could happen today, this is positive. And I think rate cuts are positive for the economy short term. They are necessary. Trump wants it. Technically speaking, it's a positive thing in the short term, but we'll see. I don't have a crystal ball, unfortunately.
Sometimes 3,400.
Sometimes the opposite thing happens that you think is going to happen. But I wouldn't worry too much, because even if there is whipsaw action, it usually settles right back where it was. That's the point of the whipsaw. A lot of people get taken out in that whipsaw or get freaked out about it, but it usually happens very quickly and it's right back in to its channel. It usually looks like this. It's going along. It goes boom, 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 and then it just comes right back into this channel. I have an appointment at 2 o'clock, guys, so I'm not going to be able to stay on all the way to the end, but I definitely, the good thing is that Bill's starting a basics call at 2, and that's a great call to be on, to just a continuation of these types of questions. And Bill's totally capable, of course.
I don't want to speak for Chad, but I think Chad's going to stay on, if I remember him saying that, right, Chad?
Yeah, I'm going to stay on.
Yay.
Nico.
Okay.
Excuse me, Nico. ETH
Yes.
is moving right now up and down.
I'm sorry, say that again.
ETH is moving up and down if you want to take a look at it.
Everything's pumping a little bit right now.
Yeah, I'm up. Yeah, ETH is moving. I told you it was a nice little bull flag on ETH, and it's breaking to the upside. I mean, look at this. Look at this. It did exactly. It's breaking to the upside. What's going on with ETH? Let's look at my open position down here. I'm up 400. I'm up 79% right now, $500 almost. Let's look at the upward trending channel. Here's the floor, and here is the top part. Let's just see. Are we coming up to it? Yeah, looks like it. We're hitting it right now. We hit it here, double topping here. Are we breaking to this red line, which if we go back and look at the red line, that is 34.20 approximately. There was some resistance for some reason there. I might not even have that in the right spot. It looks a little suspect. Boom, boom, boom. We might not even be there yet. But if we break above this, and that's interesting, but we're also, see this downward trending grayed out area? We are now above. We were hitting resistance of this overall downward trending channel, and we are breaking above it right now on Ethereum. This is all positive, guys. Positive for everything. positive for the altcoin market. This little announcement might be good. We're getting ready for it. People are getting excited. Things are moving in the right direction. But this is Ethereum, very similar to Bitcoin and XRP. They all have a very long downward trending channel happening right now, and it looks like we might be breaking out. We may not be broken out yet, but it's getting close. But the ETH is definitely moving. And if we look at Ethereum, XRP again, very similar downward trending channel. It's not really moving much here at all. It's kind of still, but it is holding above the upward trend line. But I think we're going to see. I think XRP is kind of, somebody said earlier, it's not correlating with Bitcoin. In the big picture, it is. It's been downward trending just like Bitcoin in the same kind of channel. But recently, it hasn't been moving much like Bitcoin. But it's still in the same channel. And it is bouncing off this floor. This floor goes all the way back quite a bit, back to a year ago when we came above this level from a much lower level, by the way. We were down here and we were in a very similar sideways channel. And then before that, we were down here in a very similar sideways channel. So we break this channel to the upside, create a new channel, break that to the upside, create a new channel. And that's what we're kind of in right now. And I do think that the next move for XRP will be to the upside. I would be very shocked if it breaks below this support level, below $1.75, but I wouldn't put them past them to fake a rebound and shake out the weak hands. But as you can see, we've been holding this for over a year. And you can only go by history. Every time we come back down to this level, boom, we bounce. Boom, we bounce. Boom, we bounce. Boom, we bounce all the way up to the top. Downward trending, bounce, bounce, bounce back up to the top. I mean, that doesn't mean it's always going to do that. I think it will break out of this channel, but I think when it does, it'll be to the upside, in my opinion. With the exception of this big wick right here, where we came down to $1.25, but it came immediately back up. Billions poured in, back up into the same channel.
Nico, I got a question about manipulation. I follow this guy. He like follows all these wallets and all that. And he just posted that the exact reason why the market just pumped was like Binance bought X amount of Bitcoin, Coinbase, Wintermute, BitMEX, BlackRock. I mean, does that manipulation is that like real? I mean, I guess that's the bottom line question.
Yeah, it's real. I mean, there is manipulation and there is big players, big whales and institutions and hedge funds buying billions of dollars worth of crypto. I mean, Bitcoin dumped recently because hedge funds were not liquidating, but they were taking profits. That's their fiduciary responsibility, is to take profits so that investors make money, and so they make money rather, and so the investors make money. But when they take that profit, what do they do with it? They move it into other things like XRP ETFs, which there's been 7 or 8 new ones just come on board. Once the big players and the hedge funds buy up all the liquidity out of the Ripple stockpile, then they're going to buy on the open market. XRP is going to shoot to the roof. It happened with Bitcoin back when Bitcoin was 73.5. Billions flowed in. People are like, why is the price not going up? But as soon as Grayscale didn't have any more to sell them, they started buying on the open market. The price shot up. Yeah, Bill just posted that link, the whale tracking guide, so you can go and see those whale movements yourself. Yes, it does move markets if it's big enough. Even when Michael Saylor buys $1 billion worth of Bitcoin, there is a pump. When Michael Saylor buys $1 billion, it looks like this from here to here, and then it just kind of goes back to where it was.
He's probably not buying it all at once because he has to report it on Monday morning for the previous week, but he could have had it in 5 to 10 to 20 different trades, so much smaller, so it may not be as noticeable.
That's true. He does break up those purchases. He did buy 900,000 Bitcoins, I think, something ridiculous like that, or 90,000. I can't remember, but they make it sound like he just purchased 90,000 Bitcoins, but he might have done it over a 3-day or 5-day period. I don't know. All right, guys. We got 10 minutes to the top of the hour. Oh, Chad, you taking over this call, you said?
Say that again.
You taking over this call?
Yeah.
Okay, cool. Do I got to change anything or make you the host, or are you already the host?
Hey, Nico, quick
Uh,
question.
Yes.
Do you see any advantage in splitting the distribution amount to the validators on your Optio?
That could be a good idea. I don't know enough about what validators do and who the different aggregators or the validators are. I'm going to get the answer to that question today. Before I stake, I like to know everything first, so I'm not even staking yet until I know. Because I mean, we're talking about small money at this point. So, but I will get the answer to that and which one is the best one and why, who are these different validators, or does it matter? It may not matter, but it probably wouldn't hurt to spread that. I don't know if there's any risk at all, to be honest with you. So they're offering the same fees. Your money doesn't leave. First of all, your crypto doesn't leave your wallet. It just gets tied up. From what I understand.
I was just curious if there was any advantage or safety reasons on splitting it between validators. What your thoughts were on that?
Yeah, I'd have to get more details on that first. So I'm gonna ask my guy and see what he says about it. I know he's staking. He stakes everything he has, but I'm not sure if he's using the same staker all the time. I'm not sure. I'll find out though. I'll get that question and I'll put that answer in the ICO channel.
Appreciate it.
You're welcome. All right, guys, I'm going to turn it over to Chad. Right now, like I don't even want to leave my desk here, but I have a meeting at 2:00 because we are going to have that rate cut announcement. I think, but I'm in my trades and I got my stop losses, where they are. It is what it is, but I think that it's going to be positive for the market, and maybe not immediately, but right after that. That's my opinion.
What kind of loss do you got on XRP?
Sorry again. Say again.
Stop loss on XRP?
My stop loss on XRP.
Yeah, imagine you thought something. I don't understand that, though.
Can't hear you, Rando.
All right, guys.
Oh, sorry. Put me on mute. I'm at work. Sorry.
That's okay. Let me just show you this real quick before I go, guys. This is my open position. My liquidation is right here at $1.76 on XRP. So I don't even have a stop loss on this one right now. Let me just go do it. I'm going to put it at $1.95. I'm not risking a lot of money, guys. So when you see I don't have a stop loss, I think I put in the chat when I gave the signal to use a stop loss, but I'm always watching. So if I see it start to dip below the $1.90 level, then I start to get concerned and I'm like, okay, maybe I'll close this out of reverse position. But to me, it needs to break below this whole channel. You can see it's wicked all the way down to this level several times, right down to 170. This one wicked all the way to 161. This one wicked all the way down to 125. This was an anomaly. That was something else that happened across all markets. And then this one right here to $1.84. We're in the zone and we're just climbing out of the zone right now. So I'm expecting it to continue to climb out and break out of this downward trend, especially Bitcoin and Ethereum and everything else starts to pump. But if it doesn't, and we come back down into the zone, guys, we could be down in the mud for a little while, in my opinion. So I just put a stop loss at $1.94 for the time being on XRP. All right, guys, I got to run. Chad's going to take over. Chad's probably got a different viewpoint than me, maybe, but we're excited about what's happening here. And I think that this is necessary, by the way. Interest rates have to come down a little bit in order to kick the can down the road for the economy. All right, Chad, I don't know if I can or do have to do anything for you, or you're okay.
Just don't click end meeting. You just click leave meeting and it should automatically make me the host.
When I click end, I mean, I only have a choice to click end. You think it's going to pop up and ask me to end it for all or leave?
Say it again.
If the only option I have is to end, but if I click end, does it just end it or does it pop up giving me a choice?
Click the three little dots next to my picture, my video feed, and then you should have an option to click assign as host or something.
All right, I just did.
All right, cool.
Solved. All right,
you
guys,
should
have a
be
great
able
have a great rest of your day. Any updates that I see on my end, I'm going to post in the Signal channel, and Chad's got it from here. Have a good one.
It shows up on our screen that Chad is the host now. So
Cool. All right, guys. Talk to you later.
thank you, Nico.
Thank you.
Alrighty. So we have two different things taking place. One, obviously the Fed funds rate itself. We have this little countdown timer. We've got 5 minutes and 30 seconds coming till it's officially in. At the same time, we have the FOMC statement, and then at 12:30 we have the FOMC press conference. What I've noticed with rate cuts, the actual volatility lasts through the entire thing because on this press conference, Jerome Powell is going to be doing Jerome Powell things. And so, yeah, we can definitely probably anticipate some whipsaws. And
I'm going to be doing Jerome Powell things like good morning or however he opens.
Yeah, exactly. As far as structure goes, guys and girls, I don't really have too strong of compassion. Really nothing's changed all too much from last night's live session. A couple of the alt trades entered into their target entry ranges, but that doesn't mean that I had ended up entering them. So, you know, the best component of structure I have is coming from this bottom, being the W, moving into rise level 1, which we'd be in the boardroom of, and then looking for rise level 2, rise level 3. I don't really have a whole lot of conviction there, to be honest. I think what's more likely to happen, let's pull up, take a look at where liquidity is stacking up. I have a feeling liquidity is stacking up to the downside. People are pricing in longs right now. And so a dip into the low 91, 9,900 to 91K would be the liquidity sweep. So a fast move down there. Really not too far from where price is at right now. That would be the liquidity sweep. Pushing down into here and then moving. So that's really where I have my targets, and that's what I would prefer to see. I think you'll end up seeing something along the lines of this. I think the initial rate cut is going to push us up and then move us down into these lower levels. We could potentially grab trades on both sides of that. And then obviously we always have the potential where nothing really happens, but you don't really see that too often, to be honest with you. Really, a majority of the rate cuts that we've seen have had pretty good volatility. So let's see here. We got 2 minutes to official decision and is in. Pull this up on one side. Pull this up on the other side. And we can kind of hang it. Is anyone actively in trades at this very moment? Ahead of time?
Yes, sir.
Long on ETH.
Couple longs.
Going with
You
XRP.
said today, and the inflation data is in a good place. We don't know how tariffs are going to impact prices going forward. That's uncertain. But I've got to go back to the last time that you cut rates.
Seems
in
like this is.
December,
I gotta be
and
honest
there
with you
was
guys. I mean,
still
I got this up on the side. I wish I could
So
have closed
what
captions on it.
made you feel comfortable
It's live.
cutting
It's not
then
going to let
when
me.
inflation was higher
Once
than
we
where it is
actually get
today,
the FOMC meeting, we'll flip over to the Fed's live
the
feed.
forecast for inflation in December was 2.5 core PCE for.
But this feels like a broken record to me, man. It really does. It's the same thing every time. Oh, we got uncertainty with tariffs. We got uncertainty. It's
This was
just
long before
broken
we had any
record,
idea
really.
what the actual policies would be. We've learned that the tariffs are going to be substantially larger than forecasters.
Let's scale
generally
into, say, the
thought.
5-minute
We don't-
chart.
Our forecasts are generally not particularly different from those of other, well-resourced forecasting.
Chad, do you have
operations.
any
So
conditional
what we learned,
orders
and
baked in?
particularly in
Or are you
April,
just
was
going to
that
wait and
very
see?
Substantially larger tariffs were coming.
No,
and
I
that would
don't.
mean higher inflation. That's what happened. And so now you see.
What you could do if you're
2.5% forecast in December. You
looking
saw,
to, you could
2.8%
have
in March,
yourself
you see
with
3.1%
orders, and you could open up your
now. So
Phemex
it's
trading
6 times
terminal
higher inflation for
and have orders ready to
2025, and
go.
That's a big part of the change, and that's.
I baked in just like a few,
Tariffs that are, we don't
kind of
know
lower
right
level
now, but
longs.
it's
If
pretty
it, I
apparent
mean,
they're
if there's a
gonna
big
land
drop,
higher than
just in
outside
case I'm not in a
forecasters
position where I
were really
can't be at a
guessing,
computer, but
at the end of last year.
You could.
My follow-up to that.
Definitely
consumers,
could.
Right, we're looking for relief on rates when it comes to mortgages, car loans. Small businesses want to take out more manageable loans. When you look at the cumulative inflation over the past 5 years, prices have
And
risen
here we
over
go.
20%. It's been a rough road. So
Rate cut
what
is
is the
in.
tipping point then for the wait and see approach in terms of how much it's going to help versus when it hurts the American consumer?
Well, I mean, we're trying to restore price. Best thing we can do
Not
for
really
the
much
public that
happening.
we serve is restore
was it
price
25 basis points?
If we can,
Yeah,
we will
25
restore
bips.
price stability, meaning 2% inflation on a durable, sustainable basis. That, and also maximum employment.
Pushing up.
We restore those things. That's the best thing, and that is our goal. The best thing we can do for the American people, for households and businesses, that is the ultimate thing that we can deliver. And they can make their decisions without having to think about inflation all the time. So in the meantime, we have to keep rates high to get inflation all the way down. They're not very high, let's be honest. I would say policy is modestly or moderately, probably modestly now restrictive. If you look at the economy,
ETH seems to
it's
be
not
pushing the
performing as
hardest
though
on
it
the board
performed
right now.
under very strict monetary policy, very
You
restrictive.
guys are already long in,
monetary
which is
policy. I would say
good.
probably modestly restrictive. And so what it will take is
There's your
confidence that
volatility
inflation is
candle.
coming down. Now, I would say without tariffs, that confidence would be building, because if you see what's happening with non-housing services and housing services, which are the other two big pieces other than goods, those are coming down really nicely now. So I think we have to learn a little more about tariffs. I don't know
It
what the
would have
right
been
way
nice
for
to have
us
a
to
stop
react
at
will be.
the top of
I
that.
think it's hard to know with any confidence how we should
Come again?
react until we see really
Said
the
it would have
size
been
of
nice
the
to have
effects.
a
Then we could start to make
short
more
at the top of that.
adjustments. That's what we're doing, and I think we can take the time to do that because unemployment is 4.2%. Wages are moving up. Real wages are moving up at a healthy clip now, and inflation is 2.3% headline inflation over a 12-month basis. So it's a good economy and a solid economy with decent growth.
Thank you, Chair Powell. So you're saying that uncertainty has come down, the economy is moving at a solid pace, inflation has come down over the past 3 months, and this is all moving in the right direction. So are you indicating here that Americans should expect some sort of economic pain in the second half of the year?
I'm not saying that at all. From our standpoint, what I can say is that the U.S. economy is in solid shape. Inflation has come down. The unemployment rate remains at 4.2%. As I mentioned, real wages are moving up.
There it goes.
It's a good
There it is.
Job creation is at a healthy level. Unemployment, again, as I said, low. Labor force participation in a good place.
Taking
So,
a trade out of here is
what
really
we're
tough.
waiting
Look
for
how
to reduce
wide the
rates
bid,
is
the
to
bid and ask
understand
is against current
what will
price.
happen with really the tariff inflation. And there's a lot of uncertainty about
almost
that.
in half the
Every
candle is
forecaster
the
you
delta
can name
between bid and ask.
who is a professional
or current price and then actual
forecaster
entry price.
with adequate resources and
If you took
forecasts
this
for a
trade right
living
now, you'd
is
get filled up
forecasting
here.
pretty
The
significant.
price is
Everyone that I
actually down
know
here.
is forecasting a meaningful increase in inflation.
He's on the
in
1
coming
hour.
months, from tariffs because
Is-
someone has to pay for the
is,
tariffs. And
a
it will
low,
be someone in that
a
chain
short
that I
run.
mentioned between the manufacturer, the exporter, the importer, the retailer.
Can you guys hear this
somebody
over here?
Putting it into a good of some kind, or just the consumer buying it.
Yeah.
You know, and all through that chain, people will be trying.
This is
not
definitely
to be
the
ones
most
who will
dovish
pick
I've
up the
heard
cost,
Paul in
but
a while.
Ultimately, the cost of the tariff has to be paid, and some of it will fall on the end consumer. We know that because that's what businesses say. That's what the data say from past. So we know that's coming, and we just want to see a little bit of that before we make judgments prematurely.
Someone is saying
Follow
this
up on that.
isn't
So
live. This is
you
from
spent
last
years ago
month's
talking about how you're data dependent.
Fed
Maybe
meeting,
a
which
little more
could be
direct.
true. Because
last year at the unemployment rate holding.
Midverse Bank can help turn this dream into reality.
Yeah, because that one
When you
reporter
stay true
did
to your
say,
dreams, we'll
ask
stay
about
true
the
to
second
you.
half of the year, and it's almost done.
it probably was an old feed.
Are you hiding financial services to banks, thrifts, and credit unions?
Yeah.
The reserve banks also.
Yeah, they're just predicting one rate cut for 26 and one for 27. That's probably not great news.
But at the end of the day, that still means that prices are going up. And when you look at the big picture, take a step back over the last 5 years.
Where can we go and watch this? Trying to find the live feed on this. We don't actually get
Electricity up 30%.
press conference till 12:30. 25 minutes from now.
That is why inflation is still such a concern, why we hear that affordability message.
Live.
Established by Congress more than a century ago, help promote conditions resulting in a strong, healthy, and sustainable economy. For more information on how the Fed functions, visit federalreserve.gov.
Oh, come on. This is just saying the feed starts at 12:30, so maybe I'm looking for something that isn't up yet. I feel like the real action is going to happen on the where did you see that they're only predicting one rate cut for 26 and one for 27?
Borrowers who were enrolled in the SAFE program will have a limited time to pick a new payment plan. Our Christian Cordero has more for us. All right, so why is the administration terminating this? I mean, we heard the Education Secretary says it's going to cost us all, you know.
So why do you, so if the thing wasn't live, it hasn't, they announced it, why did it do this little backlash thing that, like Nico was saying, that, what do we call that?
Because the rate cut is announced right here. Just because they're not live doesn't mean the rate cut isn't released.
Okay, thanks.
Still haven't pulled this liquidity off the board. We definitely will. We grabbed the liquidity to the upside first. There's still some setting up at 93.4, but it's only 27 mil. Got 25 here and 30 here for cumulative 55 mil of leverage liquidation sitting around on average 91K flat, roughly 91,100.
Payment plan, but those who have applied whose applications are pending will be canceled entirely.
Chad,
What's up, Dennis?
that chart you were just looking at, is that a subscription one that you have?
No, it's free.
Oh, it's free. Okay.
Yeah.
Local chilling temperatures now and a ton of snow basically all week. Just take a look at these snow-covered streets in Minneapolis and Green Bay. Heavy rain and flooding are leaving parts of the Pacific Northwest underwater.
No, you're on your cat.
Under flood warnings, river water nearly covering a major
We're
village
good.
in the area. Our
Goody, we're good.
93,500.
Yeah, snow coming down as we stay
We're
in
getting
rain
my
and
way.
snow with this storm system.
Tony, can you mute yourself, please?
That's the ice machine.
Green, that's rain,
I guess not. We got 93,500. And that is only about 28 mil. Look how big that spread is. The spread is freaking huge. You guys know what a spread? Everyone here know what a spread is?
Explain.
The spread is the difference between a current price and where you'd actually get filled at. So current price is sitting right here, but if you were to take a trade, your bid would end up here. So your spread, you'd be getting filled. Your order would be getting filled about 0.5% away from current actual price at minimum, not even accounting for slippage. So 1 to 1.5% away from current price is where you'd get filled if you placed an order at this very moment. Which, given where we're currently trading on is pretty substantial. It's really going to eat into your ability to get yourself out of risk. Dennis shared. Let's see what this is. This is the one that...
Remember also we have a very, very large economy and that the effects will be at the margin. I expect that they may already be in, but they will be in by the next meeting. We'll make an estimate. But it's not a major thing. It's nothing that we discuss. It may have been mentioned a couple of times, but as something that's coming in. But I think the outcome is, we don't know the outcome yet there, so hard to be real specific.
Neil. Thanks, Chappelle.
This
Neil
is
Irwin
the
with Axios.
feed
There have been some
that I
cutbacks
think I
in
saw
economic
was
statistics
saying was
collection in the last few
old.
weeks. Worries that long-running problems around funding and response rates may be getting worse. How much is this
Last
concern on your
FOMC
radar?
meeting.
How much confidence do you have that the gauges you're watching
The
for
spread is
the
getting
economy are
huge
reliable right now?
on perpetuals. Actually, shoot, I'm on
Two things.
Coinbase
One,
data.
The data we get right now,
perpetual.
we can do our jobs. I'm not concerned that we can't do our jobs. That's not the
Perpetual is
point.
different.
The point really is that we are starting to see
So how do you figure out the spread?
layoffs
I don't understand that.
important
It shows it to you on the
gatherers of
chart.
data are saying that they're having to cut back.
See
on the
this
size
line
of their
down here
surveys.
where your bid
That's
and
gonna
ask
lead to
is?
more volatility in the surveys.
Right here.
I think we should take a step back and, from our standpoint, and I think the standpoint of
Okay,
businesses
that's where your
and
bid and
governments
ask
and
is
everyone,
sitting.
having
This is
really
where
good
current
data
price
on
is
the state
sitting.
of the economy at any given time is a huge public good. It helps. It not just doesn't help the Fed. It helps the
No,
government.
this is
it helps
Coinbase.
Congress. It helps the executive branch.
Not necessarily so sure it's going to be as
They
drastic.
need to know what's going on in the economy. The
On
United States has been a
perpetual. No,
leader
it's not as bad
for
on
many,
perpetual.
many years in this whole project of measuring and understanding what's happening in our very large and dynamic economy. And I hate to see us cutting back on that because it is a real benefit to the general public that people in all kinds of jobs have the best possible understanding of what's happening in the economy and hence what's likely to happen. It's very hard to measure what's going on in the U.S. economy. If you read, there was a book called, it's really remarkable how many things you need to understand to estimate U.S. GDP. Very, very difficult, and it's so important that we get it right. I just would say it's not a place to. I would want to keep investing in that, for the good of the general public.
Victoria.
Hi, Victoria Guida with Politico. So you're conducting this monetary policy strategy framework review, but next year we're supposed to have a new Fed chair, and I'm wondering if that affects at all the way that you're approaching this. How do you ensure that this framework will actually be durable?
Savage.
The framework
It's pretty funny.
goes back to the framework document goes back to
That's actually
2012,
really funny.
and it's the committee's document.
Well,
It's
Trump
not
trying to
like
get him
a
overturned because he
brand
was
new
assigned
or
with an
do
auto
things.
pen.
It's been an evolving document, so
Yeah,
it
Trump's
shouldn't
been trying to
depend
push
on
him out
who
for
the
a
chair
minute.
is at all. It should depend on what's happening.
I
in the
think that
economy
auto
and what
pen
the
should
committee
only
wants
ever
to
be
do.
used
So
for signing duplicates
it isn't really
after the
tied to
original's
any
hand signed.
particular chair. And we used to renew
Birthday
it
cards.
every year. Now we do it every 5 years. So, but
Well, there
I don't
should
think
there should
anybody
be
has-
some kind of
I've never
ledger
heard
that if you
anyone
use
raise
it, you
this
got to
issue that,
write down what you're doing,
a
who's
new chair
doing.
might want to come in and go in a completely
Right.
different direction. I really don't think that's right. But but that's not going to be up to me to decide.
Is that affecting at all who
No,
you're consulting with?
Not at all. Not in any way.
Thank you. Chair Powell, Matt Egan from CNN. Relatively low gas prices
Pretty
have helped drive
fairly
down
uneventful
inflation
so far.
in recent reports, but that trend is starting to reverse given the crisis in the Middle East. How are you thinking about how the Israel-Iran conflict will impact the economy, especially inflation, and what lessons were learned during the 2022 period when another conflict, the Russia-Ukraine war, sent oil and gas prices skyrocketing?
So of course we're watching, like everybody else is, what's going on. I really don't have any comment on that. Possible that we'll see higher energy prices. What's tended to happen is when there's turmoil in the Middle East, you may see a spike in energy prices, but tends to come down. Those things don't generally tend to have lasting effects on inflation, although of course in the 1970s they famously did, because you had a series of very, very large shocks. But we haven't seen anything like that now. The
Just
U.S.
been running
economy
up
is
and
far
down in a
less dependent on
1.5%
foreign
range.
oil than it was back in the 1970s. So, but there.
A quick follow-up. I've just got to ask you about artificial intelligence. Some technology executives have recently been warning that AI could wipe out a large chunk of entry-level jobs and significantly increase the unemployment rate. I'm wondering how concerned you are, if at all, about the threat that AI poses to employment.
So this is the question. The question really is, will AI be more augmenting labor or replacing labor? And I wouldn't, we all see those announcements, including one today. I wouldn't, overread a couple of data points, because, AI should be creating jobs at the same time. It may be replacing, maybe doing both. Anyone who's done any work with it, with AI, will have been a little bit stunned at how capable it is. And it's just a different thing. So I think this
You guys have a great day. I'm gonna head over to
certainly
the
has transformation
Take care,
potential.
James.
And probably we're in the very early stages of it. They say what you're seeing now.
Take care. I don't think we're gonna get much till
It's going to be very different and even more effective. So I think it's really hard to know.
press
of course, there are
conference comes
optimists who
out.
feel like it's going to
I
make
don't think
everybody
that I don't know
much
for
more,
certain.
much
I
more,
don't think that this is actually
productive.
live.
And there are those who think it's going to replace an awful lot of
it seems
jobs
like
right
it's a
across the
replay.
income spectrum,
I think it
white
is.
collar, blue collar, and everything. So I just
Because
don't
otherwise it
know.
would be streaming
We
from
don't-
the
we don't
Fed.
have a house view on that, but this is
And
this is
there's-
gonna be a
Absolutely.
very
I got the
important
news on
question
here in Juneau,
for some time.
Alaska, and it would be live.
It would be live, yeah, which would be on this feed.
Okay, Chad, I'm going to go over to Bill myself too.
All right, buddy. You have a great day.
You have a blessed day too.
It's like that meme where it's like poking it with a stick, like do something already.
Just seems like to me, like I mentioned earlier to Nico, it's like every Fed rate cut, it just drops like crazy, you know?
The last
And,
several have. The last I covered them last night. I think we went through the last 3 or 4, and the last 2 did, and then the one in November did actually pump, but you kind of had some external catalysts there with last November, because that was the same time period that Trump, had secured his presidency, and he was running on a lot of pro crypto friendly and pro economy, campaigning. But
It
otherwise,
seems
the
like
last
this December, it's like put up or shut up now. Because I mean, even if you think that the 4-year cycle is over and it's going to push into December or to 2026, it's like this has got to be like an important rate cut, I would assume. But maybe I'm wrong.
Yeah, I mean, this rate cut didn't really seem to get too priced in at all, really. I mean, if you run back from our lows, the lowest we put in on Bitcoin was 80,600. And, typically when you price something in, you would actually have a far more consistent trend pricing in that action. But really, we've just had very aggressive whipsaws in both directions. And on a micro scale, that's holding true at this very moment. And to me, this just feels like all we're doing is changing these numbers. These little candlesticks here, right? These little bullish candlesticks followed by these bearish candlesticks over back and forth, back and forth, back and forth. To me, all that's doing is really increasing the liquidity liquidation on the board to then go and get wiped in one direction. And my theory is the best way to trade it is to get the action after that liquidity gets wiped.
Yeah, it
Instead
seems
of
like it's
trying,
going in one direction and the other direction, and all it
right.
really is staying the same.
Yeah, exactly. 100%. And all it's doing is getting people to open up positions across both sides. And so for me, like, you know what, man, I don't really want to fall for that. Open interest has been headed down.
Chad, historically, when Fed rate cuts occur or these meetings happen, what would you say like the timeline for stabilization is? Is it within like 24 to 48 hours? Like, what have you seen in the past?
Yeah, good question. When we went over them last night, we really weren't able to find a whole lot of common denominator. And the one thing that you do find in common, no matter what, is in the actual moment of it, you get that volatility in both directions.
Mm-hmm.
Right.
Yep.
And like I said, these candlesticks, and this isn't really all too aggressive from what I've seen, but really all that's taking place here is we're just building these liquidation numbers up. And these
Yeah.
candlesticks, people, I mean, think of how many people in the world right now are doing the exact same thing that we're doing, except the only thing that's different is these candlesticks are inducing them into positions because they think, oh, look, it pumped up, it dropped, it retraced. Well, it looks like it's gonna go long. All right, so I'm going long, or it looks like it's going short or whatever. And so they're trying to trade in the middle, it's really a 50-50 guess at this point. You know what I
Mm-hmm.
mean? Because we can't predict all we can really do is just decide, okay, where is liquidity and where could that present us a good opportunity after a liquidation event? What we can't predict is, okay, well, Jerome Powell is going to get on and he's going to say, the economy is great. We've got 2 more rate cuts coming in the next quarter, blah, blah, blah. And Trump and I were best friends. He just gave me a back massage at Mar-a-Lago, right? I'm being facetious here, but we can't predict what he's going to say in either direction, whether he's hawkish or dovish. But essentially, it's disguised behind that, right? If he's speaking, more dovish in the exact moment, we'd end up here. If he's speaking more hawkish, right, saying, no, we still got a lot of work to do, man. I don't really think that it's fair. It's safe to say that we have another rate cut coming anytime soon. We're pretty maxed out on QE right now. This is the best it's going to get until we get clarity on tariffs, blah, blah. Then we're going to head down here. Right. And so I'm really just trying to get the most opportunistic. I'm trying to use the volatility to put me in opportunity zone instead of trading from the middle and hoping it goes to the opportunity zone. I'd rather trade from a good zone than the middle. And so that's what I'm doing here. I'm just
Yeah.
marking up. Go ahead.
I don't know, I'm throwing this strategy out with you. I opened a limit order, like for example, with XRP with like a target based on where I see the heat map and liquidate a large liquidation zone around $2, right? And you know, that's kind of like if it hits, great. If not, then I'll enter a market order later once everything stabilizes. Do you think that's like a good strategy to have? Like if it's a target entry point to have a limit order on a trade, or what are your thoughts on that?
Yeah, you definitely can run that strategy, absolutely. And I think $2 would be the price because
Yeah.
obviously every time we've came down to that $1.90 to $2 range, we've had good level of buyers to step in to at least give you enough of a push out of here where even if that limit gets hit, the likelihood of you getting something at very minimum to get your risk off the board.
Hmm.
Yeah, absolutely.
Yeah, and
Yeah.
I don't see I kind of tracked against like what I've seen be, the higher lows compared to where we hit at like 180, and it was the last one was like 199 and or 198, then it was 199. So I'm kind of guesstimating that $2 feels like the lowest it'll go again. I mean, we don't know for sure, but that's my guesstimate if ends up being a lower high, or a higher low, I should say.
Mm-hmm. Yeah, no, I hear you for sure. And to further that too, with what I was kind of talking about here is, structurally speaking, if you're just generally looking at like generic market structure and you're looking, okay, well, I had this push and even, like how I like to trade looking at market structure, I had my push out from these lows, then I started to consolidate back and, this to me kind of looks like a boardroom and, I've got my low, I just put in a higher low. I've got pins down on my EMAs, right? Like from a technical structure standpoint, you would anticipate upside out of here, right? But things things aren't always as they seem when it comes to this stuff, especially in times of these these high impact news events. These high impact news events, guys and girls, these are like the Super Bowl events for a market maker. It's kind of funny. I just went to the Apple store the other day to get my iPhone screen replaced, and the kid helping me was talking about how he would put in a screen protector on my phone. I was asking him, I was like, how many of those have you messed up before you learned how to get all the dust out of it? He goes, well, on launch day, when we launch a new iPhone, it's like the Super Bowl for Apple, and I probably put on 150 of them in a day, right? That level of type of event, like that's kind of what we're watching here take place, right? The market maker, the Fed rate is their 4 times a year Super Bowl party. Like this is just a field day for them because everybody and their brothers and knows it's a high impact news and they want to use it. They think, they think that, oh, the market is anticipating a rate cut. We're likely to get it. They think all I got to do is just go long. And when the rate cut comes out, well, it's just going to skyrocket into profit for me. Right. But that's just not the reality. And as you guys know, if you've been in the trading with us for long enough and you've been through the last two, that's definitely not what happened. The opposite happened. We got a little bit of this type of volatility on the initial release, but then the real follow through comes with what we're waiting for here over here on the left. The real volatility comes over here when the Fed comes on and actually talks about the rate cut itself. It talks about, what they're anticipating for the rest of the next 2 quarters, inflation, job reports, tariffs, you name it. And, typically speaking, I think a large contingency that we see that after effect head down is because number one, you do get a degree of the rate cut getting priced in before it actually happens. There is a component of that. But I think more importantly, number two, Jerome Powell is typically a very hawkish person when it comes to his statements. I mean, he's not, the replay we were watching, I didn't watch that live. That was kind of actually threw me off guard. He was actually fairly dovish in that, saying the economy is good, job reports are good, inflation's not progressing, blah, blah, blah. but normally he gets on and he is not very, he doesn't really shed a whole lot of bullish sentiments on the economy, typically speaking. And I think, you also have to factor in Trump and Powell literally hate each other's guts. They hate each other. And so, with that being said, who looks good, right? Who looks like a successful president if markets are pumping, things are doing great, he's not on his side. He's not trying to, move things in that direction, right? And so he doesn't owe him any favors, is what I'm trying to say. But here we go. They're starting right now. Okay, so whatever we were watching earlier was definitely an old one.
Yeah, it just seems like a lot of them just don't care about the regular people. They just want to hurt Trump. And we saw that with the whole government shutdown and cutting off SNAP. They didn't care about people. They just wanted to make Trump look bad. And that makes them look worse.
Yep. Here he comes. He's going to say, "Good morning, Hanks." This will be fun.
Good afternoon. My colleagues and I
My
are
name's
focused
Jerome,
on
and I
achieving
suck.
our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Although important federal government data for the past couple of months have yet to be released, available public and private sector data suggests that the outlook for employment and inflation has not changed as much since our meeting in October. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals, in light of the balance of risks to employment and inflation,
You guys hear this? It's pretty quiet on my
the
end.
Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point. As a separate matter, we also decided to initiate purchases of shorter-term Treasury securities solely for the purpose of maintaining an ample supply of reserves over time, thus supporting effective control of our policy.
Yeah, it's quiet
rate.
on my end too.
I will have more to say about monetary policy and its implementation after briefly reviewing economic developments. Although some key government data have yet to be released, available indicators suggest that economic activity has been expanding at a moderate pace. Consumer spending appears to have remained solid, and business fixed investment has continued to expand. In contrast, activity in the housing sector remains weak. The temporary shutdown of the federal government has likely weighed on economic activity in the current quarter, but these effects should be mostly offset by higher growth next quarter, reflecting the reopening. In our summary of economic projections, the median participant projects that real GDP will rise 1.7% this year and 2.3% next year, somewhat stronger than projected in September. In the labor market, although official employment data for October and November are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline. The official report on the labor market for September, the most recent release, showed that the unemployment rate continued to edge up, reaching 4.4%, and that job gains had slowed significantly since earlier in the year. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. In our SEP, the median projection of the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Very little data on inflation have been released since our meeting in October. Total PCE prices rose 2.8% over the 12 months ending in September, and excluding the volatile food and energy categories, core PCE prices also rose 2.8%. These readings are higher than earlier in the year as inflation for goods has picked up, reflecting the effects of tariffs. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have declined from their peaks earlier in the year, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 2.9% this year and 2.4% next year, a bit lower than the median projection in September. Thereafter, the median falls to 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 3.5 to 3.75%. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. A reasonable base case is that the effects of tariffs on inflation will be relatively short-lived, effectively a one-time shift in the price level. Our obligation is to make sure that a one-time increase in the price level does not become an ongoing inflation problem. But with downside risks to employment having risen in recent months, the balance of risks has shifted. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. Accordingly, we judged it appropriate at this meeting to lower our policy rate by a quarter percentage point. With today's decision, we have lowered our policy rate 3/4 of a percentage point over our last 3 meetings. This further normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2% once the effects of tariffs have passed through. The adjustments to our policy stance since September bring it within a range of plausible estimates of neutral and leave us well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. In our summary of economic projections, FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.4% at the end of 2026 and 3.1% at the end of 2027, unchanged from September. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. Let me turn now to issues related to the implementation of monetary policy, with the reminder that these issues are separate from and have no implications for the stance of monetary policy. In light of the continued tightening in money market interest rates relative to our administered rates and other indicators of reserve market conditions, the committee judged that reserve balances have declined to ample levels. Accordingly, at today's meeting, the committee decided to initiate purchases of shorter-term Treasury securities, mainly Treasury bills, for the sole purpose of maintaining an ample supply of reserves over time. Such increases in our securities holdings ensure that the federal funds rate remains within its target range and are necessary because the growth of the economy leads to rising demand over time for our liabilities, including currency and reserves.
Watching grass grow. Yeah,
As
right.
detailed in a statement released today by the Federal Reserve Bank of New York, reserve management purchases will amount to $40 billion in the first month and may remain elevated for a few months to alleviate expected near-term pressures in money markets. Thereafter, we expect the size of reserve management purchases to decline, though the actual pace will depend on market conditions. In our implementation framework, an ample supply of reserves means that the federal funds rate and other short-term interest rates are primarily controlled by the setting of our administered rates rather than day-to-day discretionary interventions in money markets. In this regime, standing repurchase agreement, or repo operations, are a critical tool to ensure that the federal funds rate remains within its target range, even on days of elevated pressures in money markets. Consistent with this view, the committee eliminated the aggregate limit on standing repo operations. These operations are intended to support monetary policy implementation and smooth market functioning, and should be used when economically sensible. To conclude, the Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing our inflation sustainably down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. At the Fed, we will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Howard.
Thank you. Howard Schneider with Reuters. Just first turning to the statement, just to be clear, we're on the same page here. The insertion of the phrase,
This is a very, very uneventful.
Does that indicate that the Fed is now on hold until there's some clearer signal from inflation or jobs or the evolution of the economy along the baseline outlook?
So, yes, the adjustments since September bring our policy within a broad range of estimates of neutral. And as we noted in our statement today, we are well positioned to determine the extent and timing of additional adjustments based on the incoming data, the evolving outlook, and the balance of risks. That new language points out that we'll carefully evaluate that incoming data. And also, I would note that having reduced our policy rate by 75 basis points since September and 175 basis points since last September, the Fed funds rate is now within a broad range of estimates of its neutral value, and we are well positioned to.
I love how political language works. We're in a broad range of an estimate of neutral. Like that, what does that even mean?
And a fairly steady unemployment rate.
Broad range of an estimate. Okay.
For next year, what's given rise to that? Is this an early bet on AI? Is there some sense of improving productivity out there? What's driving that?
So a number of things are driving what's happening in the forecast. And I would say if you look broadly at outside forecasts, you do see a pickup in growth in many of those now too. So it is it's partly that consumer spending has held up. It's been resilient, and it to another degree it is that AI spending on data centers and related to AI has been holding up business investment. So overall, the baseline expectation for next year is, at least at the Fed, and I think with outside forecasters too, is a pickup in growth from today's relatively low level of 1.7%. I mentioned that the SEP median is 1.7 for this year growth and 2.3 for next year. You actually, some of that is due to the shutdown. So you can take 0.2 out of 2026 and put it in 2025. So it would really be 1.9 and 2.1. But overall, yes, for a few reasons, fiscal policy is going to be supportive, and as I mentioned, AI
15-minute candle just flipped bearish.
Continues to spend. So it looks like the baseline would be solid growth next year.
Steve.
Thank you, Mr. Chairman, for taking our questions here. You had previously described rate cuts in terms of a risk management framework, and kind of following up on what Howard was asking, is the risk management phase of rate cuts over here, and have you taken out sufficient insurance, I guess,
Let's get some
against potential
volatile
weakness in terms
questions.
of the data we might get next week when it comes to employment?
I think
So
that
we're
might be all that
deal
we're
of
going to
data
get here
between
today.
now and the January meeting, and I'm sure we'll talk more about that. And the data that we get are going to factor into our thinking. But yes, we have. If you go back, we held our policy rate at 5.4% for more than a year because inflation was high, very high, and unemployment in the labor market was really solid at that point. So what happened is over last summer of 24, inflation came down, and the labor market began to show real signs of weakness. And so we decided, as our framework tells us to do, that when the risks to the two goals become more equal, you should move from a stance that favors really dealing with one of them, in that case inflation, to a more balanced, more neutral setting. And so we did that. We did some cutting, and then we paused for a while to work our way through what was happening in the middle of the year. And then we resumed cuts in September, and we've cut now 3. We've now cut a total of 175 basis points. And as I mentioned, we feel like where we're positioned now we're well positioned to wait and see how the economy evolves from here.
If I could just follow up on the SEP, you have a whole lot of big increase in the growth numbers, but not a big decline in the unemployment numbers. And is that an AI factor in there? What is going on in terms of the dynamic of you get more growth, but you don't get a whole lot of decline in unemployment? Thank you, sir.
So the implication is obviously higher productivity. And some of that may be AI. It just also, I think,
this liquidity up here stepped in. This was not here earlier. 32 million at 93,800.
Of it is 2% per year.
It's telling me people are short. We saw more shorts come out on the board.
Creation. Of course, higher productivity is also what enables incomes to rise over long periods of time. So it's basically a good thing. But that's certainly the implication.
Longs didn't change much. Shorts changed.
Thank you. Colby Smith with the New York Times. Today's decision was clearly very divided. It wasn't just the 2 official dissents against the cut, but there were also soft dissents from 4 others. And I'm just wondering if this reluctance from several people to support recent reductions suggests that there is a much higher bar for cuts in the near term. And what exactly does the committee need to see if things are well positioned right now to support a January reduction?
Sure. So let me just say, as I mentioned, and as I've mentioned here before, the situation is that our 2 goals are a bit in tension, right? So interestingly, everyone around the table at the FOMC agrees that inflation is too high and that we want it to come down, and agrees that the labor market has softened and that there's further risk. Everyone agrees on that. Where the difference is how do you weight those risks, and what does your forecast look like, and where do you ultimately where do you think the bigger risk is, and it's very unusual to have persistent tension between the 2 parts of the mandate, and when you do, this is what you see, and I think it's actually what you would expect to see, and we do see it. Meanwhile, the discussions we have are as good as any we've had in my 14 years at the Fed. They're very thoughtful, respectful, and you just have people who have strong views, and we come together and we reach a place where we can make a decision. We made a decision today. We had 9 out of 12 supported it, so fairly broad support. But it's not like the normal situation where everyone agrees on the direction and what to do. It's more spread out, and I think that's only inherent in the situation. In terms of what it would take, we all have an outlook in terms of what's going to come, but I think ultimately having cut 75 and the effects of the 75 basis points will only begin to be coming in. As I've said before a couple times, we're well positioned to wait to see how the economy evolves. We'll just have to see. And we will get, as you know, quite a bit of data. I should mention on the data, as long as I'm talking about it, that we're going to need to be careful in assessing, particularly the household survey data. There are very technical reasons about the way data are collected in some of these measures, both in inflation and in labor, in the labor market, so that the data may be distorted and not just sort of more volatile, but distorted, and that's really because data was not collected in October and half of November. So we're going to get data, but we're going to have to look at it carefully and with a somewhat skeptical eye by the time of the January meeting. Notwithstanding that, we will have a lot of the December data by the time of the January meeting. So we expect to see a lot more, but I'm just saying that what we get for example, CPI or for the household survey, we're gonna look at that really carefully and understand that it may be distorted by.
Let me just put this on mute. I'm gonna go over some charts that we set up last night. See, I don't really think a whole lot's changed, to be honest with you. This was definitely probably the most uneventful Fed rate decision I think I've probably seen in a while. Unless something miraculously changes and he gets a volatile question and he answers it. But yeah, pretty lame. Pretty lame. I want my money back. All right. We had the trades that we were looking at last night was Link, or I'm sorry, was it Link? Litecoin, H bar, and Link. Litecoin came into our entry zone in here and pushed away from it. I'd still rather have this entry, to be honest. But I suppose if you ended up taking that entry down here, just, in our range, you'd be in profit right now. Doesn't really seem like it's going to continue, though. Hard to say because of, a lot of the price action we're getting on the charts is just mirroring what's taking place with this rate cut decision. We're just getting vectors back and forth, back and forth, back and forth.
It's weird. It's almost like it's mirroring every word he says.
I know. Link, same story. Came right to our entry price, pushed away from it just in the last hour or two. LTC, let's look at H bar. Same thing. Everything's got a little bit of a push. I ain't buying it though, to be honest with you. So I personally haven't made any entries on those. I was looking at XDC. One of our members brought up XDC yesterday. And I did like how we pushed out of this area where we were anticipating it coming back to. Getting some decent follow through on that. The rest of the altcoin market has a lot of variance. You got a couple coins that are pushing, and you got most of your stuff is not really doing a whole lot. Um, I don't know, man. I don't really have very strong convictions, if I'm being honest with you. Total 3 is a complete slop fest. Everything's been a slop fest for the last week now, with all these pushes and 100% retracements. But my bias is that we'll fill in these lows down here before making the next push. don't feel very strongly convicted that longs out of here are gonna pay. XRP as well. I just feel like if we were going to get that push out of these areas, we'd see it right now. But XRP can't put in a high, has not been able to put in a higher high for shit. This is your most recent high, lower high, lower high, lower high, lower high. Right? To me, it feels like based on that, we have to come back down again to pick up liquidity and steam before heading up. Because we've already tried, we've already made these little attempts and these little runs that keep failing over and over and over and over and over again and can't get higher than its previous high. It's a tough sell. It's a tough sell. If the move was up, it would be happening. That's how I feel. If the move was up, it would if there was the reason for all this stuff to push, it'd be pushing right now. I'm just not seeing it. I don't see any follow through.
Hey, Chad.
What's up, buddy?
Do you think between now and Friday, before the weekend trap, that'll maybe zigzag a little bit, a little to the upside, getting up close to that previous high right there that was to the left there, and then drop to grab the janitors, which are the market makers, because they like to sweep and sweep the liquidity down below before it would make the run up?
Yeah, it's a good thesis for sure. It's a good thesis. I think I would prefer to see weekend trap get set low. I'd prefer to see weekend trap to get set low.
But that could put us in, if we did it this way, where it rises up a little bit, so they grab a little more money before they drop it down to grab that, 170s range, to take it into Tuesday before the pump up. I mean, that makes the sweepers happy, makes them money. They get a little bit on the way up, tank it down to the 170s, which, I mean, I'd be happy too. And then but before the ultimate rise up, if that's what it's going to do, and that would give it, I'd say Friday night or Saturday, Sunday, Monday into Tuesday, to drop down to that 170s range, and then kick it back up. Because if they believe it's going to go up, if what Powell has said, not what they've done, but what he has said gives them confidence, then they're going to have confidence in it, and they're going to be expecting that things will go up, and they're not just going to want it to go up right away. They're going to want to bring it down. They're going to want to grab
Right.
more money, so they'll make it on both ends. And I don't, that just I haven't been in this long, and I haven't been doing hardly anything other than listening for the last several weeks because I've been doing this Reads Across America thing. And I just paused for a minute to stop what I'm doing and ask you this question. But that just seems logical. If I were the big money guys, that's what I would do.
Hit the
You know,
highs first.
yeah, you take
Yeah.
out as much as you can. I mean, it doesn't even have to go beyond that, but you get a bunch of people that are going to pump money in on a long, thinking it's going to go high, and nab them there before the drop down.
Yeah.
And I mean that I can't see. I'm looking on my phone. I can't see what that range is. for the price that you're at right there. But
93,750 to 94,
yeah,
250.
and so I was thinking the XRP range, but if it drops down to the, 83, 84, or down to the 74, I mean, you want to talk about happy clams, you know, uh, because the rise up from there, even just to the previous all-time high, is gangbusters for them.
Right. We got a long way to go to the 74s, but for where we're at currently, as far as near-term liquidity on the board in the next couple days, that I would definitely agree with you that as far as, like I said, near-term liquidity, pushing out to that 94K range would be a really good fake out. It'd be a really, really strong fake out before price coming in down to the lows to take out the lower liquidation range. Be a strong fake out, actually. Because you're right, everybody wouldn't be anticipating, all right, yep, Fed rate cuts in, well, this is the pump. They get wiped. But as far as the 70s go, there is a stack down there. It's just, that's not going to happen in like the next 2 days. It would take a little bit of time to get
But
down
yeah,
to
I
the
was just throwing
70s.
that 74 range is just out there, just numbered indicating a drop. But I wouldn't think it would happen the next couple of days. I'm thinking my thoughts is it'll zigzag up a little bit uh, before the weekend trap hits, and then it'll drop down to grab that lower liquidity before the midweek reversal top, taking it back north.
Yeah. No, I
That
think
was my
you're
thought process.
No, I think your thought process is spot on. I mean, you're thinking like a market maker, which is really the best way to be thinking on the charts. What's the market? What's going to pay the market maker the most? What types of moves? What types of opportunity they're going to present to fake people out in the wrong direction before they build liquidity and wipe it? Thinking like a market maker very rarely serves you wrong.
Well, plus I'm going to be involved in this event through the weekend, and I haven't, like I said, I haven't done anything because I'm not experienced like you guys are, and I don't want to get involved with something, even just taking one of your trades, if I'm not going to have the time to even really go and check and think clear-headed without the distractions that I have setting this ceremony up and everything that I'm doing.
Yeah.
So I'm planning on next week, uh, to make a move. If I had time and stuff, then maybe if it's hitting up and I'm feeling it, then I could go for the short down. But right now, the way I see things in my time frame working out, I'm just waiting for the bottom to hit where I can be back and decompress a day and be able to spend a little time and look at the charts and
Right.
see where we are and listen to you guys. So that's where my head is anyway.
Yeah, well, I think it's in the right place. I mean, majority 99.99% of the time, right? You trade what you see, and I think oftentimes a lot of folks can convince themselves to see something that they don't really see just to take a trade. And so I kind of faced that position really just over the last 48 hours, 72 hours from like, man, I really, I want to be getting positioned in. I want to have positions. I want to have some signals out there. So like I come to the market, I'm like, this market structure is really, really sloppy. Really, really sloppy. I'm like, I don't really have a high degree of confidence at the current location of which, where to get on the board. And so I'm just like, you know what? I'm not gonna take a trade from in between two opportunity zones just to hope it goes to one first versus the next. So yeah, I haven't taken a trade this week, and definitely not my preference, but at the same time, I'm not gonna take a trade just to say, oh, I'm in a trade, and then have it get stopped out, 4 hours later. I don't see the advantage of that. And so for you to see that as well is good.
Yeah, all I'm doing right now is spending money to make this thing happen. But uh, I'm not making money trading, but at least I know I'm not losing. Uh, because, or fear of losing because I'm not able to be involved, to be mentally here with it because I'm trying to do other things. And that would just, you know, cause a bunch of disruption trying to get this event done. And I need to be clear headed to get that done. The way I see it, clear headed to get this done as well. Otherwise, I'll probably end up losing money and then I'll be even more frustrated, spending
Yeah.
money and losing money.
Yeah, no doubt. No doubt. Yeah, this Marlon said this was very uneventful, and I certainly agree. I certainly agree this has been uneventful. I was anticipating at the very minimum some degree. I mean, we didn't even push up into a liquidation range. And I think that's what's most surprising to me. I wasn't really anticipating a clear, push and continuation. I was anticipating some degree of manipulation in the sense of what we've seen here, but only exacerbated to take out the liquidity that we've put on the board. But in the excuse me, but in the grand scheme of things, we really haven't built that much liquidity. And people are closing positions right now. This just dropped this liquidity just dropped very substantially. Actually, almost all of it. The only we have at 93.7 dropped down to 36 mil. And at 91, it dropped down to 29. That's 30 something million dollars worth of positions that just closed. Not liquidated, just closed on their own accord. So that was there. That liquidity was there. No more than 15 minutes ago. Now, if we really zoom out down in the 90, 89 flat is where we have our next act. But even then, it's only 51 mil and 45 mil down in this range. It's just a little, how do you put it? A little surprising, I suppose. Now, when I scroll out to the 1 week, I have 73 mil at 94.7. And that's the closest we have, which would be congruent with your thesis, Norman, of hitting the highs first before dropping it low into trapping traders. But yeah, pretty weak, man. Pretty freaking weak. So I'm a bit surprised by that. I wish I had more for you guys. I really don't. Like, I don't know. I think looking for short entries up here is probably the best bet. Off like 94.5, 94.8. I think that's what's most likely to happen next. I suppose if you really, really, really needed to take a trade, I mean, you're going to be, you might eat a stop loss, but you could fight for 3-1 on that. $92.090 on your stop. Market entry. TP at 95K. If you really, really wanted something on the board, it would be that.
And then you would short if you got closed in profit, then you would short.
Not exactly. No, I'd look for a short setup. I would flip my bias, but I wouldn't just take a short because it's at 95K.
I understand.
Yeah. Yeah. See, if you got a market entry that see it's pushing away from us now. There goes your 1 to 3. Drop down to 1.28 RR. Maybe barely 1 to 1, including slippage.
Yeah, that's where I plan on taking off at least half of my position, and then reevaluating. If
You
it
already
keeps
have a
going
long
up,
position.
yeah. If it keeps going up, I make more money. If not, I just move my stop loss, kind of halfway, and I still make my at least a good half of it off the board at a potential top.
Mm-hmm. Yeah. Yeah, I mean, by the time I put this on the screen and where price is at now, half the trade's already done. So it's pretty astonishing how dramatic your risk to reward can change. It's gonna go grab this liquidity right here at 93.78. Just a couple $100 away. Yeah. I wish I had more for you guys. I really do. That was super, super uneventful. Fun stuff. But it is what it is. It is what it is. I will definitely let you guys know if I do end up taking any positions. I certainly would like to, of course. Of course. I'm just certainly the opposite of what you would consider to be an impulsive trader.
Hey, Chad, thanks for your analysis of my thesis. I think with this too, Powell speaks in such a low volume monetary voice, and I think in this one he didn't say anything particularly good or particularly bad. He hit some positive points, but then he would seem to come back and knock it down with a negative connotation. So as traders, I would think the best thing to do would be to wait probably until tomorrow to kind of feel out how the corporate world feels about what he has said, because we're not going to find that out in the next hour. We're not going to find it out today. It'll go on, and the media will be talking about it and stuff, and then you'll get some sense tomorrow of what the corporate world is thinking. Are they going to be, planning scale backs? Are they going to be looking to expand? Those kind of things. That'll give us a good idea of where the market may be going from here in the short long term, not in the next week, but within the next month or so. So are we looking at a good push where Bitcoin, XRP, all the coins will be making a big run for a bit and ending the year, possibly breaking the 4-year cycle with the impending transfer from fiat to blockchain? There are a lot of things to consider with this, not just what he's saying now, but how is that interacting with everything else? And I don't know, is there any other coming announcements or decisions with blockchain introductions or ETFs that would be an important thing to consider and look at?
I don't know off the top of my head as far as crypto specifically goes, but next week on Tuesday, December 16th, we've got a pretty big, and basically an entire day of high impact news. And that's pretty much it for next week, the 16th. I think we're in a weekend trap down here. So definitely got more of a short bias than anything.
I'm not doing anything, but at least you're confirming that my thinking is going in the right way. I'm learning in my thought process. So that's a good positive.
Yeah, it is. It is having a sophisticated thought process and thinking about, both sides of the equation. And, like I create the analogy all the time. It's like a lot of people come to, and this is really the delta of why folks have a hard time finding success with trading is because they come to the market and treat it like they're playing checkers with their 6-year-old niece on a Thanksgiving evening. And in reality, you are playing against a grandmaster with a high EO of chess, right? And so, that, being able to go through a well dissonant, cognitive thought process is step one. Step two is being able to avoid the emotional standpoint of feeling like you need to be in a trade. Oh, it's pumping. I need to get in right now. Da da da. And you're buying tops, chasing candles, selling bottoms, chasing dumps. And when in reality, you're majority of the time doing the opposite.
Yeah.
There's always more places in the back.
So, but all right, guys, I'm gonna wrap this up. Sorry, this wasn't all too eventful. Hopefully, you at least got some value out of it. I don't know if you did, if you didn't, but this is kind of sometimes the way she goes. But like I said, what I am looking for, we are heading into my short target entry. Really pretty simple. I just want to see see price start to kind of consolidate here, and then build that short M. And then I would look to take that trade because that's something I can actually get good risk to reward on, and that would be a trade me worth actually taking. I wouldn't have to try too hard to get a 1-to-3 risk to reward ratio on that trade versus going along here. It would be really tough to find yourself a positive trade. So, but I'll keep you guys in the loop when I do take a position. So, all right, guys.
Hey, Chad, thanks for taking over the call for the meeting. That was
Yep.
Really cool.
You bet, man.
Appreciate it.
You bet, brother. You bet. All right, guys. If you need anything, holler at me in the chat.
Look, maybe.
Yep, absolutely. Don't forget, guys, we have a live
Maybe.
session with Jessica Freeman tonight. She will be sharing everything you need to know about crypto bookkeeping and taxes, 8 p.m. EST. So I'll see you guys there.
Thank you.